All right, my beautiful people. How's everybody doing? Are we live? Let me see. Let me find out. My beautiful people. How's everybody doing? Are we live? Let me see. So, I got my watch list together. It was kind of nice this morning to get my list going without doing it live on YouTube because I was like, things really came together. So I might start doing that. I apologize for being on a little too late because I was up late last night because of NVIDIA earnings today. I wanted to get a lot of stuff that I needed to get done. Just around the house and stuff. So I was up late doing that, getting that out of the way so we could have NVIDIA earnings and stuff. We're going to have that live. Let's talk about what's going on this morning. Let's talk about how you're going to hit that like button, subscribe, 1,000 subscribers. We're doing a giveaway. If you make some money here, donate down below. 2 links in the description down below. All right? Second or third, whatever. Post your plays. If you guys have plays, whatever it is you're watching, questions, throw them down below. So far, all of our trade ideas have worked out really, really well. I'm going to hurry up and get right into it. Target, Petco, some of these retail names. Look for more. You have BJ's. BJ's had a decent earnings last week, so we'll talk about that tomorrow. We'll take a look at Target. Keep these names and names from last week and names like Palo Alto, Zoom. Keep them on your list. 2-3 days from now, they could set up nice trades when people forget about it and the flock has moved. Keep it on your list. So far, I have 2 ideas. Not ideas, really, but, outside of what we've been watching. Okay, let's go into it. So Target fell 7.6%. What a shame, bro. I'm rooting for Target. What did Walmart do? Again, if you guys could, hit the like button, subscribe, donate down below. Links in the description. Let's get up out the trenches. I'm posting my plays. Post your plays. If you see anything with relative strength, relative weakness, we're in this together, right? We're in this together. Remember, real quick. Well, I'm going to go back to Walmart. Guys, it's setting up again. Let's just keep an eye on this. It doesn't mean it's going to just blast off from here, but I will keep this on my radar once again, right? We've been on this Starbucks trade, and it has just been giving you these huge 3 day rallies. All right? 77.35. 77.35. All right, and when I give you guys my trade ideas and stuff, you guys have to understand I may be wrong. You may see something I don't. If you would like to, mention it in the chat. Say, hey, I see this. You might want to hold off on that, whatever, this, that, the third. All right, we have NVIDIA earnings after the bell. Everybody and their mother knows that. For instance, Starbucks, if I do end up taking this and we see strength out of the overall markets, again, retail Target is down bad. Well, here's Starbucks. That may, not help them. It may hurt them. But, I mean, they've already been smacked and whacked. Back of the Cadillac, all right? They're almost at the burial site. But we get a bounce here at 77.50. 77.50. Take profits in front of prior high a day from Tuesday, Monday, and Friday. Okay? That's up there at 78. 78.50. All right, so let's keep it moving. Walmart. I don't know why when I get on here it gets hot. I do have to shut the windows because the sun's coming up. All right, so Walmart pulled back just slightly. Let's take a look at Target, TGT. All right, remember, volatility might be high on these names. Sorry about that. All right, there we go. Now we get some airflow in here. All right, run it. All right, so target's down. Let's keep it moving. I did add something to the list, and I'll let you guys know exactly what that is. All right, so NVIDIA obviously fell, sitting ahead of tech giants' quarterly earnings, up more than 3%. Urban Outfitters, who cares? Lululemon. Lululemon's down 3.9%. Announced the departure of Chief Production Officer Sun Cho. All right, Amazon. Fell after its tech giant announced that its cloud computing unit, AWS, will invest around $17 billion in data centers in northern Spain, significantly boosting its expansionary plan in the country. Looks like they're using what they have to expand that. PDD, Pinduoduo, rose 7.3% after the company beat first quarter revenue estimates, powered by strong adoption in its international shopping site. Temu. Oh wow, so Pinduoduo owns Temu. That's cool. E-commerce platform Pinduoduo. All right, so what did that do to Baba, which we've been watching Baba? Nothing. PDD. Nice job. All right, cool, sweet. So Pinduoduo, I don't know what it was pricing in, but let's just say 1280, call it 13. You close there around 145.50. Sorry that's loud. 1280, $13, 145.50, 55, 60, and you're pretty much, you can see right there in front of 160. That's what it was pricing in anyway. All right. If you get pullbacks, look for the test of that 158 or 159, 160 on Pinduoduo. You can see it pulling back now. See if you get another run up to like close up in there to like, you know, the high 158s or high 159s, 160 area. I obviously have that. I have these levels for this thing. That's wild. All right, let's keep it moving. Let me stay on track. Again, good morning to everybody. If you could hit the like button, subscribe. Throw some tickers, spam the ticker or spam the chat with some tickers, so we can get stuff going here, and we'll cover some names. If you guys have stocks you guys want to cover, be happy to be obliged to. Come on, what are you doing? Undo remove price. Okay, I guess we'll leave that. All right, Pinduoduo is making a nice run here. It's break even on the year, just about. It's about to go positive. It just went positive on the year. All right, so it just went positive on the year. We'll keep this in mind. Remember that, right? Take a look at year to date, because we're about halfway into the year, and see what it's doing. Like, you're seeing that recovery out of Apple, right? It's finally about to go green. Tesla, right? Things like that. Let's get to my watch list so far. I have, outside of what we've been watching, Tesla. That 100-day is a motherfucking monster, okay? It's a monster right now. But let's see if we can't get a day 2 continuation. All right, let's see if we can't get a day 2 continuation. And what I'm going to look for, all right, I don't like that we gap down. So the 100-day, once again, smacked it, said, nope, you're done. Here, 100-day, smacked it, nope. So it does not like the 100-day moving average. All right, so that is an area we could look to go back into. All right, so looking at 100, and just go back on your charts. You guys can see. All right, look here on this daily chart. 182.50. 182.50 is what I'm watching. All right, 182.50. So we're bouncing off it now. We've had this level here since this earnings run up. Let's see if we can get this direction. Normally, all right, we have broken a prior resistance level on a greater volume. Chances are we should hold that as support. But look what happened here, right? You did it back here too, and it never held. It consolidated, all right? It consolidated, but so we'll see. All we can do is say, hey, if we take a long here, we're going to risk 182.45. We're going to risk $1 to make $7.50. That's a 1 to 7. That's a beaut in my book. I'll take that every day. All right, I'll take it every day. So Tesla 182.50 longs in the 100-day moving average. All right. Do we have anybody here? I'm actually just curious if we even have anyone here because I want to continue with my watch list. Yeah, no, we don't. We don't. YouTube does not want us to help some people out. That's so funny. It's all good though. It's all good. All right, so that was Tesla. All right, so you can see here Amazon. All right, these levels, I hate that there's so many on this chart, but what are you going to do? It is what it is, right? Resistance, you make it support, break it, prior resistance. All right, so those are the major levels that I'll be watching for. Is this, targeting this upper range here up at like 187. All right, 187. You have this downside wedge that you tried to break out of a few days ago, and that was a failed break. So let's see what happens when we get up into 184. Okay, the 20-day moving average, which we just recently broke above this morning. Okay, we broke above it this morning, and you can see we're putting in that tail there. Let me make it so you guys can see this. I want my people to see it. All right. So you can see resistance to the left. Let me pull this back if you want. You have a nice bear flag up on top, make it support, bounce right up off of it. So we can use this. If we hold 183.96, 184, we can use this for a nice range. And you can see to the left of us, you just had some major downside because you don't really have anything off of 187. You go from 184 to 187 every time for the most part. Okay, there's no in between. Either you're going up or you're going down. That's the only difference in my book, in my opinion at least. So I would look to take profits in if we can get there. If we hold 184, I'm looking to be long on Amazon. Okay, 184 longs into 187 into Monday's highs. So taking profits, if you get that initial move, take profits. Take the other, I don't know, a little over a quarter, a half of a position. Take a piece off if it gives it to you. Maybe take half off. And then maybe if you want, take the other half off going into this, I don't know. I would save some to get up to, I still think we can get to Monday's highs. I do. All right. Sell side volume is there. So let's see. Look, we're going right into this wedge. You see how we're also, it's that 184 level is also meeting at that wedge. So you could end up just sitting here in between the 20-day and the 50-day, which is this red box. 50-day green box will be your, listen, the bright green box and the brighter red box will be the 20-day and 50-day. If it's like a dark green and like a darker red, you'll know if it matches up with the levels. How this one isn't. It'll be attached to a line if it's like a buy zone, like if it's the area that I'm looking to buy. So, longer term trend, we have some room to run if we can hold 184. All right, and I'm looking to get up to like Monday's that 187. All right, taking profits into 186. Seeing if we can't test 187, but 186 would be a nice trade. It's $2 there on Amazon. It's an idea, right? There's news with it. It feels like you're getting a nice pump this morning. We need pullbacks though, so pullbacks would be the 20-day moving average. I feel like this was a failed breakdown yesterday. All right, we failed breakdown, and now we are back up at that level. You guys can see right here this pivot. You can see it came down, resistance, 184, boom, boom, and it just whoop for no reason, kind of no reason. So we're gonna look to see if we can't pull this thing back, get long. If you want to, maybe you can use pre-market highs. Maybe you use 183. I don't see why we couldn't get there. I think we can get there. You might end up getting a sell-off and then like a bounce like the second half of the day. You get that move either to the upside or downside for the first hour and a half, and then it just reverses and just either tests high a day or it goes back to test low a day or the opening price, depending on how you move. So maybe you do something where you just kind of just pull it back and then just kind of just float and see where you're at, and then NVIDIA maybe takes you through that 20-day or not. All right, man, we already have 20 minutes left. So, you know, as of right now, I'm just going to watch this level here, 183.50. Yesterday's close. Here, let me do this. What the fuck is going on here? Bro, I was just here and oh my god, this is so ugly. This is why I hate having all these lines here. Bro, I'm sorry guys. I literally cleaned everything up for the majority of these names. Alright, sorry about that. I do apologize. Alright, daily chart though, you see you're sitting here right at 184, so we gotta hold 184. We gotta hold it, in my opinion. We gotta hold it. This is the ugliest chart. So you can look at it also from a bear case if you want to get short at 182. If you see a reason to get short up there at, or I'm sorry, 184, get short. And maybe you got another move back down to like 182, 183, but that's up to you. I'm not going to get short at 184 and then we find support at 183. You know, it's just not, I'm okay on that. All right, let me keep it moving. So you guys got Tesla, right? I gave you Tesla. I can go over the overall markets. Let's see if, I'm not going to move on from here. Let me get this. So, let's see here. 184, yeah, 183.90. I would really like to try and get a nice long here. It's got to hold 184. If it doesn't hold it, you know, I feel like you're going back down to 182, honestly. So, all right, there we go. Sorry, guys. I want to get this right so that I don't have to fool with it. All right, let's keep it going, guys. Let's keep it going. Again, if you guys have tickers, throw them in the chat. Questions, throw them in the chat. Thank you guys for being here. Hit the like button, subscribe. So far, if you just followed the analysis and the ideas, you're making money if you executed. Sorry about that. All right, let's go. So, look, I gave you Tesla. All right, 182.50. 182.50 to 187.50 to the 100-day moving average. 184, taking some profits. All right, that pre-market high on Tesla is what you need to watch for. I'm telling you guys. Watch that 184. All right, watch 184. Take profits in front of that level. All right, take profits in front of that level. I will be. You do whatever you want. Just playing. I'm not saying it like an asshole or anything. I'm just saying. What is going on with my charts? That's all I also want to know. I want to know what the hell is going on with my charts. All right. Okay. That's Amazon. Let me look at JP Morgan real quick and a few others. So, and then Starbucks, 77.35-ish holds. Look for a move into $77.50, $78. All right, let's see here real quick. I want to also look at BABA. And listen, guys, when this thing goes, it fucking goes. It goes. All right. We may need to pull back and test 76.50. So maybe you could find some downside here on Starbucks. If you do get a pullback here and you break this level, if you break here, right? This is what I'm talking about, a buy zone for these. You know, darker box. If you try to move higher and you reject this area again or make a lower high, I mean, even then you can't really say you're going to fall because you are just putting in a nice wedge here. So we'll find out. Anything or anyways, it breaks to 77.50. You got a really nice move back down to 76.50. I'm not even going to try to keep these motherfuckers here. AMD, and I want to look at JP Morgan and BABA real quick. These things are setting up with really nice volume. AMD, you're bumping into the 50 and 100-day moving average. I'll probably wait on semiconductors. 50-day. Rejecting it. Look for a little bit of support here at 162. So the Qs have to maintain this level here, right? You got to maintain. You don't have to do anything, but I want you guys to understand that there was divergence in the Dow and the IWM, and the Dow is setting up for a nice long today, and that might help us on the JP Morgan trade. All right, so the Qs are obviously our leader. They're up at highs. You know, they're well above Thursday and Monday highs, while the rest of the market is pretty much below last Thursday and Monday's highs. So, you know, let's look to see if it extends or if it just hangs out here. You guys can see this box. 456 resistance right now, and at 455, 50 cent range there. It's where we're sitting at. All right, it's what I'm watching for. All right, that's what I'm watching for. Now, I'm going to show you guys something here. If you guys notice, all right. 530. It's like 530, 45, 530, 35. Call it 530, 50. 530, 50. All right. I can't really say that. This is what I'm watching for, right? I want to see if we start making a rejection point here at like 530, 50, 530, 85. If this continues to reject. All right. Which is, yeah, it's well below yesterday's close here. I'll give you guys the, I think it's 530, 85. Is that what it is? Yeah, 530. Yeah. 531. Yeah, what am I talking about? Yeah, whatever. Who cares? I'm not really, you know, if I'm gonna trade the overall markets, I'm gonna look for the Dow. It's got the cleanest setup. All right, but these are the levels I'm watching. It's like 530.78. Call it 530.80. Really, at pivot highs up there at 531. So it's like a 20-cent range. All right, and I'll show you guys what I'm talking about here. You guys can see here, right? That double top from yesterday, double bottom from Monday, right? And then Thursday, you held it, made it resistance, all at the same time. Does tricks. All right, so you bumped up into 531.50, was resistance, and just under yesterday's close. So you did not make that, you did not pull back and make this 530.80, 530.79 support. You turned it into resistance now. So what? And then you have this also this minor level here at 530.41, which if you look, there was a reason. I swear. Might have been the 5-minute. That's probably where it was, or the 15-minute chart. That's exactly it. Look at the 15-minute chart, bottom left. Right? You guys can see here, right? Support, resistance. There at 530.45, resistance. You test it again, test it. Well, it breaks it. And then, you know what I'm saying? So, and then minor support level there, resistance. All right, and then it breaks above. It's like, it's not a great setup on these markets, but the Dow has a beautiful setup. The Dow has a beautiful setup, guys. All right. Sorry, I gotta get my charts set up real quick. All right, we got 10 minutes, guys. But look, the Dow, real quick. I don't even know if there's anybody here right now. The Dow, look at that. Look at this beautiful pattern. If we break here, and this chart looks like Starbucks. All right, not that Starbucks is in it, but Watch this level. Watch Monday and Tuesday's low. If we break it, you got some downside. Take profits into 397. Okay, into, and if you can break 397, you have room pretty much down to 396, 395.50, or 395.95. All right, so that's the Dow. Let's go look at JP Morgan real quick. It's got a lot of volume and everything. So if we can get a bounce here, then I look for financials to keep going. Let's go see here. Let me pull up the daily chart. BuzzFeed has some news. Remember, DJT was down bad yesterday. You know, if you can get a borrow, cool, short it if you want. I'm not saying to short it, but yesterday it was really weak. You get a bounce back, or if you get that continuation. Puts were stupid expensive. I wasn't doing it. JP Morgan, look at this prior double top, right? You break through it on an increase of volume, and it fails to hold. Massive volume yesterday. And what do we say? So 200. We went long JP Morgan yesterday. I took it off a little early because it just wasn't giving me the continuation. All right. Beautiful pattern here. So if you get another test back into 200, see if it rejects it, and we look for that downside back into the 20-day moving average. All right. These are nice setups, and that's why I'm choosing them. Beautiful patterns here. All right. We have 10 minutes, y'all. I gotta hurry the hell up. All right, let's keep it going. Guys, if you guys could, do me a big one. Hit the like button, subscribe. If you want to donate down below. But run this stream up. Share it with a friend. Help me out a little bit here. I'd like to be able to get... Sorry, I was just looking at this. I'd like to be able to get a community going here. All right, watch this pivot high from yesterday. We can watch this level here, support 199. And watch NVIDIA with your semiconductors. See if this breaks. All right, see if that breaks. I just think that all right, I can't fool with this anymore. All right, 200. Okay, yeah, watch this high from yesterday. Watch this level here. 199. All right, 199. Dude, this is what messes the charts up. Is stupid ass patterns like that where it gets a huge sell off for no damn reason. All right. And yes, we're going to have NVIDIA earnings tonight. And yes, I'm excited for it. Alright guys, good luck today. I'm going to set my charts up here. Right here, let me do this. And then Microsoft, watch Microsoft. I'm going to wait and wait for these names to I'm going to see what NVIDIA does. And then we have AMCN, Tesla, Starbucks, JP Morgan, okay, if Microsoft continues to reject 430, you could look for support down there at 426 area. Fuck, I don't want to spend a bunch of time on this. Yeah, 426. 426 area on Microsoft. All right, Amazon up here bull flagging. Yeah, we're looking for that 185 on Amazon. That's a... Yeah, so we're making this area resistance level, guys, from Thursday. That Monday, Tuesday, Friday. No, yeah, Friday's lows on Amazon are... So we might want to just do a 184 rejection to see if we can't take that to low a day. Tesla getting a nice bounce, guys. Tesla with a nice bounce there. All right, what time is it? Again, whatever you guys see, call out in chat. More so, like if you have questions, you can do that also. But more so volume, right? If you see something that has nice volume, candles are closing at highs or lows, and looks like it's going to give you like a nice continuation, don't be scared. Help feed some people. You might get a steak thrown your way. You might get some money thrown your way. I know I will. All right, and that's just how I operate, right? It's just how I feel like things should be done. You don't give to people first until they prove, you know. So when they ask you for the money first on any group and shit, what have you like? Prove your worth, bro. Prove your worth. Anyway, let's see here. All right. So far, guys, you know, we've been doing these. For me, you know, it's a matter of getting in and getting those trades. Again, don't forget Starbucks. If this thing falls, guys, you could get a bounce and look for if it rolls over and we break this level. Look at that. Look at all that upside. You could see this thing back down to like $76, $75. All right. That's what I would be looking for. Is pullbacks to 76. If we can get that break. Profits off in front of 76, 75. All right, charts. Oh, shit. Real quick. Baba. Don't let me forget about Baba. Keep an eye on retail names and names like Palo Alto, those CrowdStrike names, stuff like that. A few days are going to go by and people are going to forget about them. All right, people are going to forget about them, and we'll be there to scoop up that reversal trade. All right. So to the two people that are here, mad love, guys. I appreciate y'all. What time is it? We have a few minutes here. Let's get prepared, y'all. Look at the dollar. What did we say? Right? 105. That bounce into 105, we look for the rejection up there if we can get it. It's funny how NVIDIA earnings are coming out the same damn day. Bitcoin, okay, pulled back. That sucks. It's not holding that level. It's up there at resistance already. Already up there at resistance. It's wild, isn't it? Already at resistance. So what I would look for is see if Bitcoin can give you another test of that 70,000, and you could look for like some small upside on maybe like Coinbase. All right. Good luck today. If you need a hand, you know, post your comments, questions in chat. Again, Baba has gone so far, so quickly. That might, what is that, a rejection yesterday? We have 2 minutes left. 87.50. The bottom end of this range, but you have support there, possibly support, but this candle takes that out. We could see Baba back down to like 82, I feel like. And look, it's already at 85, so it's trending in that direction, y'all. It's trending in that direction. I feel like I might get on this today. I may try this out. I may get short pops on Baba. All right, this thing has a lot of strength to the upside. I really don't want to fight it. But I do feel like we can get this thing back down to 184. I feel like it's got a 180. I'm sorry, 182. No, 182. What am I talking about? 82. 82. All right, 82. So you're getting this rejection here. See if it pops today, and you can get like that 86, 85.93. All right, let's go, guys. Let's tap in. Let's get loaded. I'm logging in right now. I'm going to throw up Tesla. We got to be quick on these Tesla trade. This Tesla trade too. I can tell you right now, guys. All right, 30 seconds, baby. 30 seconds. Take a deep breath. Look to the left. Look to the right. Wish them luck. They may not be here by the end of the day. All right? Let's get it. Let's get it, guys. Let's get it. Let's get it. All right, good luck, guys. Look, there's that test of 182. I'm already looking at these motherfuckers. I'm telling y'all right now, I am not letting it happen today. All right? You turned 184. What did I say about 184? It's going to break. They're going to pump fake the shit out of these bulls. All right. What do we got? 185, 185, 185. We got 185, 185, 185. 57,000. Volume is trash. Oh, she does not want to do nothing, bro. Oh, they doing it on purpose. They holding it. Oh, shit. Making us nervous. So, 837. You got a ton of volume here between 185 and 187. Oh, it's a nice day 2 VWAP. You got... Wait, I'm in it. Damn it. No, I didn't want to get in it yet. Oh, no. Get out, 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 get out. Shit, I did not want to take that, y'all. Dude. I did not want to take that. Guys. Bro, I did not want to take that. I didn't want to take it yet. We'll see if I can get a pop and try to get this thing. It's struggling. Come on, let's get that 184 test. Let's get that 184 test. It's so weak, guys. Dude, they fucked me. Here it goes. It's going to go, too. It's going right now. God damn it. I didn't mean to get in that. I didn't mean to take that right then and there. I couldn't. There we go. Let's get out of here. Fuck. That's a small... God damn it. Coming up at 10, existing home sales for April, expecting 4.2. Yeah, watch 184 there. I'm out of this. I'm out of this. I took half off there, and I took the rest of the half off here at 165. They screwed me on that first half of that fill. I didn't want it right then and there. I just, you know, I don't know. I didn't want it at that time. This is a nice pullback and hold, but, you know, if I don't get my entry right and they messed me up on that fill when I got in and when I got half of that position out, so I'm unscathed. I didn't lose any money. I made a little bit of money, but it's like that's not where I wanted in. I kind of wanted to see what she was going to do. I feel like it's going to pull back a little bit. Here's the thing. If it doesn't speed up here, you're going to see a reversal right now, I feel like. I don't want to predict the price, but I'm telling you guys, if you don't break right now, this is a good long. Look, here it goes. See how fast it's flipping right now as I'm saying it? You needed to pick up the sell orders there. Here it goes. Now... Let's see. What are you going to do? What are you going to do? A lot of indecision. Man, what a piece of shit, yo. And look, just made it resistant. Pink bow. Alright, watch to the left of you over here. You still have a little area down here, 181.75. on Tesla, 181.75. You could find a little support here, possibly. All right. That's why you take it off. If you don't execute correctly. And I feel like you'll get a bounce here off of 181.75 and then bounce into that 182.50 rejection. Again, I wouldn't have mind getting long down here at 182.20 down near the low a day and getting that, you know, just getting that reversal. That would have been a really nice trade, but I didn't mean to. It is what it is. You know, I made a little bit of money, but I still, let's go. Let me get out of here. All right, watch 181.75. 181.75 is on watch. JP Morgan. There we go. All right, see what happens up here. If you okay, so bounces back into no, 3 minutes. Okay, so that's what was wrong. Up top, my top right was on a 3-minute chart. Let's see here. See if you get a rejection here on JP Morgan. Let's see. Nope. Look at it blast through there. This is your level, really. It's 199.20. 199.20. The major level is 200. All right, 200. You might be range bound here. The Dow had the best setup of all, which was, you know, buying down here. Look at those Tesla calls now, down at $1.20. Like, that would have been nice. I had my order up, is what happened. I accidentally got filled. I accidentally hit it and I got filled. So took half off, got back to that 165, took a little bit off for pretty much a quarter of it was profit. Let me see here. Look at Myrna. Relative strength, guys. This is what we want. Look at that. Blast off, y'all. You have room. Wait, wow. Hold on. Daily chart. Look at that volume. Look how the candles are closing up at highs. Damn, I missed it. Yeah, you're probably going to take profits here. Don't enter this. I wouldn't enter this. So we broke through that. Flat top, pretty much, it would be like a range up here at 156. I've always had a thing. I used to have a thing with Novavax, but Moderna's always had my heart. You know, this was the only COVID stock that I bought. The only one. I didn't buy Gilead. I didn't buy none of the others. Really, that's your resistance level right there at 163. All right, so that's the level I'd be watching for, is like 160, 163. 163.50, because there's your low, and then your double top high into that support level. So it's just above 160. But all right, so there's that. Let's go back to Tesla. If you guys want, look, yeah, Tesla's breaking down. This is what I thought. This is why I didn't like it, because everybody's drooling all over it. But, you know, it didn't hold. It is what it is. I was still able to lose on that trade and make a little bit of money. All right? It's all good. No big deal. All right? The day is not over with. What is going on? All right? Dude, what? Amazon. We can look at AMD. AMD's pulling back. Look at Amazon go, guys. God damn it. Look, take profits in front of 185 and in front of 186. Do you guys see what I'm saying? Every morning, bro. Every morning. At least every day this week. It's been spot on. Spot on. Tesla held there on the 5-minute. Watch for that reversal. Watch. See if you can get a reversal on Tesla there. Shake them out. Rip it higher. Oh, I broke it. Nope, it did not break. No. SPY. So look, that level I told you guys about, that 530.75. All right, we're sitting right on it right now. Can you turn that into support? You have to. The Qs are. All right, and then we get a test of 531.50. Can we do it? Keep an eye on the Dow. Starbucks is bouncing off of that level back to the high. Easy trades here, guys. Easy trades. Amazon, winner, chicken dinner. All right. Tesla. Tesla. All right, Tesla. It's just no volume, guys. Nobody's buying it up here. It's just not giving you the continuation, unfortunately. Unfortunately, it's not giving you the continuation. Yo, I'm so pissed. I can't believe I did that. I mean, this made for a great scalp, believe it or not. You know, it made for a great scalp. Those deltas were kind of gnarly. Not really, kind of, not really. I just had a feeling that this market was just going to be like, yeah, this is going to set these triggers up for failure. All right, AMD pulling back to the 50-day. Let's go back. Let me keep this up. Is anybody watching Tesla here? Yeah, it's just going to continue to the downside. All right. SPY is not holding. Where's the Dow? The Dow is ripping, y'all. The Dow is ripping. What's the winner? Market Watch, the Dow. So it's Amazon carrying the Dow today, and Microsoft. The Russell is flat. TJX is doing good. ADI. Utilities are down. Healthcare down. Where are the banks? Healthcare, industrial, financials, PayPal. It's so funny. Energy. Oh, okay. Well, there's a pop. Okay, PDD. Look at JP Morgan, man. JP Morgan's on just doing really well right now, guys. The volume isn't that great, though, on this bounce. Please know that. The volume is not that good looking. All right, 199.50. See what happens here. Just breaks it on low volume. Great. I'm not in it. I'm not in it. All right. Pinduoduo, and like we said, see if 150 holds and you get a run to 160. See if you can get that run to 160. SPY doing really well. The Dow. Look at the Dow, guys. And this is what I said pre-market, was the Dow had the best setup. That's what I said. The Dow had the best setup today. And look at it, screaming to the upside. Goldman Sachs. Try it out. What are the bigger names? Microsoft. All right. Microsoft. Nice little rally. Now it's pulling back. IWM, real quick. I just want to see the indexes. So, once again, that support that was 208, it looks like it's turning into resistance. And we might get another shot at 204. I feel like that 204 is coming in the IWM. I feel like in order to really get the IWM going, because it needs to get up to like 230 or so. Like, you need to get a retest of these levels down here. I mean, you had it for like one day, right? And then it just left it. Okay, you wicked it. Everything was pre-market. You know, you want that 930 to... Yeah, look at that. See if you start turning. Look at this. Look, support, right? Hangs out. Support. Look, it kind of like puts in a lower high there. Resistance there at 208. And then it reclaims it. Right? And then look, resistance. And now it's just like, all right, bet. We're going to start making... See if you make this 208. 208.02. See if you make that resistance right now. See if it does make it resistance. I don't know if it's going to. I'm just saying. Watch out for it. Nope, it's trying to hold, isn't it? What can we look for? So Amazon worked out, and I messed myself up with Tesla. And this is why we said take profits. Take profits as it makes new highs. Look, we're above that wedge, it looks like now. We're above the wedge. We're above the wedge. It's pulling back to test that downtrend. Oh, never mind. It's below it. Yeah, let's see. Look, you're turning this into support now. You might be able to get a hold there at 184. Low volume pullbacks. You have your 9 EMA right there. You're underneath a VWAP. Use VWAP as a possible, you know, entry or exit, or just, you know, give you a sign of, you know, all right, VWAP is now holding support. So how's everybody doing today? Let me know what's up. Where y'all at? How you guys doing today? What y'all watching? Don't nobody want to communicate. It's all good. I'm not going to put you on the spot. PDD, analog devices, ADI. Why do people in the picture still have masks on? Ha! That's so funny. That is true. Got that COVID picture. Oh, we're wearing a mask. We're sick. That is funny. They probably, like, you know that they had to have picked that. I mean, I guess this is a good picture and they just took it because it was from COVID. I don't know. That is funny. That is really funny. Let's see. Do these ones have... Oh, they could have used this. I don't know. They're making it look busy, I guess. It's a good picture, I guess. I don't know. That is funny. That is too funny. Alright, sorry, let's go back to charts. Dude, I'm so pissed, man. Watch Amazon, man. I think Amazon's got a really nice... But it's been weak. I'm not going to just try and say, watch Amazon when it's been in a downtrend and try to think I'm going to call a reversal. Why is my daily chart doing this? What the heck? I don't want to use Apple to do it. Let's look at, like... Wait, doesn't this... Like, look at Microsoft, right? And that chart of Microsoft and Amazon look dead-ass the same. Doesn't it? Tell me it don't. Nice little, like... That little, like, reverse head and shoulder. It's... I wouldn't consider it one. It's a... evil looking head and shoulder.
Coming up in a little over 10 minutes, the existing home sales data for April.
Bro, I need to find something to trade, guys. Where's Tesla? We'll keep an eye on it.
Minutes at 2 p.m.
Nice, nice, somewhat of a reversal. That's low volume though. This would be your entry for a short up here. They may just throw you all around. Let me be honest with you. Yeah, look at this. This could be a nice, nice resistance level. I'm gonna just be honest. Just be honest with y'all. I think a lot of people just got played this morning if they did not take profits. Yeah, or you know what I'm saying? If they did not, because you could have sensed if you were watching that price action on how it just was. There was just no energy there, and that if you did not break that 182, it was either going to break, because if it did not break, it was going to run, and those shorts were going to give up. So sitting there watching the underlying stock, like, and just at how it reacts at a level and how many times it bounces off of or bounces, rejects or holds the level, can really give you the insight. Like, okay, look, we've been sitting here for 3-4 minutes. It keeps hitting it, and each time it bounces, the energy just gets, there's just no energy to the upside or downside, So let's see here. Do you get a VWAP rejection? We're gonna find out here in a minute. Let's see if VWAP continues to act as resistance. I still think you get some downside here. The volume's still very low. That's crazy. 165. Who the hell would buy this? That's $18 in 2 days. Well, really 3. Does it go up at all? Let's see. I want to watch this. It's just every time it goes up, it's going to just suck the premium out. Anyway. All right, let's look at a name like Walmart. So Walmart's headed to the upside with Target not doing so hot or well, whatever you want to call it. Yeah, look at that. That's a nice setup right there on Walmart. If you get some volume here. I'm going to keep these options in level 2 up for Tesla, okay? And Tesla is right here, guys. I'm going to take this fib off. There it goes. Look at it. Look at it go. It just moves quick, guys. Shit. Oh, wow. It went above it, though. Tesla got above that level. Come on, you got to hold there. You got to hold 182.41. Wow. It just went up to the 90 MA. It went up to it just to pull it down. Wow. That's mean. You know how many people probably just got long that? Oh my God, look at that tail. There's some people getting hurt today, boy. They getting hurt. You just need to get that follow through back down here, which you could get. You could get down to 178, 179. I mean, that's your level down there at 180. So, yeah, look at that. Look at that tail. You solidified that. Look at that, guys. Look at that. That's so funny. And look at it on a 15-minute chart here. You see how clear that looks? Like, you break above it, and it just... Here, I don't know if you guys can see it or not. Right? You can see this prior support, right? Resistance at 180. You break above 180, and it should pull back on low volume into this area here at 179, 180. And then see if you hold that as support. Right now, you're fighting the 15-minute VWAP. it's just not giving you that downside. And you have that resistance level there at 182, and right now you're still at 182 trying to reject it. 79.30. Uh-oh. You might get one wick down here. And where are you at? 182. So that's $2. This thing might go higher, y'all. I think this thing might start to go higher in like just a little bit. If you can get like a pullback, it's going to go higher just to make it go lower. I feel like. Because if it goes lower right now, the chances are you might get some buyers to step in there. And it might be on. And you'll probably get back up to like high a day. But I don't know. Again, I don't know. I'm not trying to... I'm just looking at the chart and seeing what the chart's telling me.
Jim, I gotta get you on the VIX, which closed decidedly below 12 again. It's currently under 12. Bespoke with a nice piece on what complacency means these days.
Well, if they're gonna run it up, because they're like, yeah, it's going down. It's going down. Mm.
But yeah, I mean, it's disturbing that there's a level of complacency that is shocking. At the same time, remember not to fight the Fed, and the Fed is winning, so you'd be up against something that would indicate that the Fed's staying higher for longer, the numbers get better, then the Fed has to change their status, and you're short or out of the market that day. That's a Peter Lynch day. Peter Lynch used to say that the great fund manager. There's like a couple of days a year that you got to be in, and I would be afraid to react to the VIX and get out before that day where Powell says, you know what, it's time to say that we've had 3 straight months and I'm getting a little better. He doesn't have to say we're coming. Yes. And he learned his lesson. I'm getting a little happy.
Yes, yes.
He's so, I want him to be happier. He's a great guy. He is. He's like a great guy.
Seems plenty happy, but okay.
Well, anyway, I mean, I think he's going to get his day. It's just that he's got to take his time and not be exuberant. And we have to get the other people who speak publicly to realize that doesn't help anything other than perhaps their stature if they want to move up in the police athletics, which I ran. Don't worry, I'm not against PAL. I like PAL.
As for tonight, Jim.
What the hell are you talking about, Kramer? I have no idea what Kramer was talking about right there.
One of the reasons that Walmart's doing so well, it's gotten too expensive to go out. Unless you're a 1099 offer that day where it's time to say that we've had 3 straight months and I'm getting a little better.
All right, QQQ.
He doesn't have to say we're coming. He learned his lesson. I'm getting a little happy.
Yes, yes.
He's so, I want him to be happy. He's a great guy.
Watch for the SPY to test high a day.
Seems plenty happy, but okay.
Well, anyway, I mean, I think he's going to get his day. It's just that he's got to take his time and not be exuberant. And we have to get the other people who speak publicly to realize that doesn't help anything other than perhaps their stature if they want to move up in the police athletically, which I ran. Don't worry, I'm not against PAL. I like PAL.
As for tonight, Jim?
Okay, I've got Cisco, but the SYY come to get a read on restaurants. By the way, I think that one of the reasons that Walmart's doing so well, it's gotten too expensive to go out. Unless you have a 1099 offer like Texas Roadhouse or Brinker, you're not doing well. And Texas Roadhouse, you got to, you need an early bird special. And then Sridhar Ramaswamy, everyone wants to know what's happened to Snowflakes since Frank Slootman. Well, you're going to find out if you watch the show tonight.
Wow. That was,
Yeah, I got it.
You can see,
like I just when I ran the 200, I used to run the 220.
That was definitely
440 and then mile relay.
High ticker count
and
on this hour.
10 relays, which was, a couple weeks ago. And I threw up after the race.
We'll see at 6.
Absolutely.
Mad Money, 6 p.m. Eastern Time. When we come back, more on what to expect from NVIDIA tonight as the market is on tenterhooks here. Dow's just down 10.
All right, 208.
One of my favorite supplements.
208 and skate.
Turmeric helps with healthy joints and inflammation support, and Qunol has the #1 doctor recommended form of turmeric.
I'd much rather have that level, but what do I know? So the SPY and Qs are holding that level there, which would be this flat top resistance there. Let's see, they bounced off of it. They bounced. Well, really, it would be this level there that they bounced off of. So the SPY and them are rejecting that. So 531 is 208 on IWM. Let's see. I feel like the IWM is leading. Or it could be our leader. Oh, what is that? Bro, what? Oh, I see. Look, we're in the range.
Are you interested in safeguarding your investments with gold? Alamos Gold is a growing Canadian gold producer with a long track record of outperformance. Alamos Gold.
With a long track record of outperformance. Like, bro, it's gold. Okay, let's see. The Qs are pumping a high a day.
Existing home sales of 4.14 million. Consensus was 4.21
And
million.
look. They suck you into the trade right at the data comes out, right? Right. They suck you right into the data when the data comes out. That's so funny. Alright, what you gonna do? What you gonna do, I?
Futures getting a pop on that lower than expected number.
Looks like the markets are struggling up here. Sorry to cover Tesla up here. Yeah, it pulled back. Damn, son. Where'd you find that one? Come on, what's going on here?
30 minutes here into the trading session. Here are three big news.
M18, Mattel, and Outright Games launched multi-year partnership to create
Dude.
games for console.
Is this thing really gonna start cranking?
Tango.
Bro, my stuff is froze. What?
Rallying, the chip maker beating earnings estimates, giving an upbeat outlook, helped by growing demand for its automotive and industrial chips.
Oh my god.
Speaking of chips, the biggest semiconductor stock of them all, NVIDIA, getting ready to report after the bell today. The stock is up 10% this month, going into those highly anticipated results.
We mentioned the housing data. Let's get existing from Diana Olick this morning. Hi, Diana.
Home sales in April dropped 1.9% to a seasonally adjusted annualized rate of
207.80.
units. That's a miss. The street was looking for a gain to 4.25 million. Sales also down 1.9% year over year. These sales are based on closings, so contracts signed in February and March.
Okay, so
Jumped at the start of February and then held around 7% for the next 2 months before moving even higher in April.
hold on here.
Though inventory rose 9% month to month and was up 16%.
I would like to try to go higher. Dude, I'm missing this trade, bro. God damn it.
ELAN, Elanco,
Just give me 1 second. Sorry, guys. I'm just having a Pop-Tart real quick. Nobody got tore up, did they? Yo, a lot of things worked out really nicely. I'm going to keep... Alright, watch this level here on IWM. I haven't traded IWM in a long time. There it goes, a nice reversal pattern here. I actually want to use this.
I am confident that we've gone to a control phase.
Was that 207?
Another meeting in about 2 weeks. Sounds like she is gearing up for a rate cut, so she feels good about the progress of inflation.
The phrase "really confident" does get your attention, although the boom Bank, meantime, was warning about wage inflation today. And, of course, we mentioned UK CPI throwing some cold water on the hopes for early cuts.
A little bit hotter, but so far the data in Europe has been consistently good as far as the decline in inflation rates. Germany's always a little more worried about inflation than the rest of the Eurozone, so that's a pretty historical thing. And then the other fact, Carl, I don't know if you've been following these polls we've been getting and surveys about how Americans are...
See if you can get a bounce into like 207.78 and see if that rejects.
Okay, the Harris poll. So Guardian and the Guardian did like a commissioned Harris poll for Americans and how they feel about the economy. 55% say the economy is shrinking.
Tesla just hanging out.
Say the economy is in recession, which we know on CNBC.
Watch Amazon here.
But just
49% believe the S&P is down for the year, which seems incredible.
which it's up 15% and 23% last year. 49% also say unemployment is at a 50-year high. In fact, unemployment is at a 50-year low, or near there, up under 4%. 72%, I think this is the explanation. 72% say inflation is increasing, and inflation is increasing 3 to 4%. It's not 9%.
Whoa. Hold up. What happened here?
But the complications around how Americans are feeling with inflation clearly are weighing on
Sorry, I don't know what my stuff did. Sorry.
administration.
Or anyone running for office, really. If you're, the reaction this morning is largely about an uninformed electorate in general, and whoever is in power is going to have trouble delivering a message if Americans are going.
So the SPY is still just climbing to yesterday's high, and we said, 530.50. Is it holding
Is high, and it's high relative to where we were a few years ago.
or rejecting? The Q's 455.50.
It's a tale of sectors, and it's lumpy, and it's not, the high income is doing much better than
550.
the
So
low
that
income
held.
feels the pain of higher
Looks like you're getting some rejections up there.
interest rates are raising credit card loans and auto loans, and that ultimately weighs on the consumer. And yes, overall,
And the IWM's making a lower high.
could be an explanation for why people are still feeling so crummy, despite the fact that the numbers are good and people have jobs. It's a hard one to figure out, and I think the messaging is lost.
It's not hard to figure out, guys. She's so dumb, bro. When you have insurance, $400-500 for like basic insurance, like it's not hard to figure out.
True though is that inflation is high, and it's high relative to where we were a few years ago, and I think it's a tale of sectors, and it's lumpy, and it's not, the high income is doing much better than the low income, which feels the pain of the higher inflation prices.
Houses.
Also, higher interest rates are raising credit card loans and auto loans, and that ultimately weighs on the consumer. And yes, overall macro data has been good, but it could be an explanation for why people are still feeling so crummy, despite the fact that the numbers are good and people have jobs. It's a hard one to figure out, and I think the messaging is lost for sure on the American electorate.
The messaging is a green arrow or a red arrow. So which do you want to? It's not a question of what you want to believe. That's why the poll is so stark.
It's not hard to figure out. It's not hard to figure out. You have a job and people are barely making it. Yes, they have to do more, and if they want something, they got to do it themselves. So, but anyway, I really don't care about all that. I do care about it because I want people to have houses and be able to, be able to live their life and stuff. But I don't trust them. I know what they want to do. They want to take. So I care more about that than anything else. All right, IWM trying to make a new low here. Qs are pulling back. They just tested the highs and are making a nice quick pullback. I do want to. So what did we say? 207.78. We said look for the rejection there. I'm gonna try for like a what is that? 206. That's so far away. 207.
UK's Information Commissioner Office on
I'm gonna wait
making inquiries with the company to understand safeguards in
just
place
1 second.
privacy that
Hold on, this stuff might be late.
Tango.
Look at this wedge. Putting in a wedge here on Amazon. Nice little pattern there.
Decrease in basket, or how much Americans were spending or putting in their shopping. Inflation, he did say, was getting to a more
All right, so
so that should also
let me go back. Sorry, I clicked on the wrong one. I clicked on the wrong option.
Oh, and by the way, he said no big change from last quarter to this quarter in terms of the consumer health. They think that the relaunch of the Circle program, their loyalty, is going to help.
This might
He said inflation included back
put us in a
and
It feels like the way the market's acting, we're literally probably just going to sit here. Right? We move $1 and that's about it. At least you have an increase in volume on the S&Ps and the Qs, but you don't really have it for the IWM. You don't have it for the IWM either. Oh shit, I forgot about Exxon.
They do point to things like, as you were saying, about lower confidence, higher credit card balances, less consumer certainty. Also, the shift of...
Look, Tesla might pop higher because it's still sitting there. And you're going to get some people that are going to start to get nervous. It's either got to reject or it's got to do something. It doesn't have to do anything, but it's either going to go it's going to pull back to low a day, put in a double bottom, or you're going to break and you're going to start trying to head back up to 184. All right, look, that could be our Baba short. Fuck. $82 is the target. Wait.
LR, MR, Larry Martha, Felix getting some volume, Lima Romeo, Michael Romeo.
Yeah, it's like 82.50. Let's see here. But look at that volume. Look at that volume. It just fell out of bed. Volume fell out of bed. That's not what we want to see. You want to start to see an increase in volume start to come in here and that momentum start to pick up. All right, 9 EMA and 85 has acted. That's a nice double top up there. All right. What else do we have? What else can I throw up with this? Small green day for me. A small green day on Tesla. I got into Tesla a little early and sold on that pop back to that pre-market on Tesla. Took half off for a small loss, but then took the other half off for a nice little profit. Let's see here. Of course, the fill was trash. It was just garbage. Not moving there. Okay. What else do we have? Look at Starbucks. I told you guys. Starbucks. Yo, on the watch list. Look at this thing, man. Look. Busting out all the stops. I'm telling y'all. I'm trying to tell y'all. Listen, we bought the dip on this too. For anybody that bought leaps, congratulations, guys. That's a nice buy point right there. That's a nice buy trigger with an extension in volume. That's a beaut. That is a beaut. Fuck. This thing's probably could go, guys. You're in the gap. You are in the gap now. You do have that inverse head and shoulders there. You guys can't see it here, but head, right shoulder. If I look, left shoulder, head, right shoulder. We come back up and test this area, even though we already did, bro. Starbucks could be cruising for a bruising. I'm gonna watch out for that. Look at that breakout, guys. Awesome. Let's go. Did anybody take this and watch it? I mean, this has been easy money. Easy money, honey. 77.25. We said watch for the break if we break it, but it didn't. It pulled back, held low a day, prior day's low, and you're only up 1.3%. This thing could just get going. I'm telling you. It doesn't take much for this thing to go. What is that delta 24? 80. That's too far out. I think 80 is too far out. I don't know what to do. I'm not going to fool with it. I'm not going to mess with it. But that's a nice job, man. Great job. Nobody took it, did they? These were all on the watch list. Again, I can't make you guys take anything. You know, I can't do it for you. But I can present you. I can present them. 200 rejection. Look at the daily chart on JP Morgan. Look at that daily chart.
Coming up at 10:30.
All right. The Dow, if financials, look at the overall. Check out the overall industry. Okay. Flat. All right. Some are red. Regionals are down a little bit. I have a bad headache today. Fuck. You have credit services that are up a little bit. Healthcare trying to go green. Energy is down. Look at XOM is down 1.7%. The day I forget about it is the day it gives us continuation. Oh my God. You guys just heard me say XOM, right? Because I forgot about XOM. Motherfucker, bro. It broke the level and retested it. Shit. Can I get something dirt cheap? Can I get something dirt cheap? What are we down? It's down 2%. Fuck. That's it. It's pretty much did its ATR already. 118.50. 116. 17, 18. So 250 pretty much. Call it, we'll say tops maybe $3. 117.50. 115.50. It's $2. 16.50, 15.50. Yeah, that's about it, guys. Damn it. Damn. Bro, Tesla screwed me up, bro. For real. Tesla messed me up. I feel like the next one's going to go is JP Morgan. And we're not going to forget about it because I want to make sure I don't forget about it. Unbelievable. The two you wouldn't think of. XOM. Starbucks. Damn, I must have inside information. You know what's funny? I just got done talking to some kids, or like what seemed like kids. And, you know, Nancy knows things. She's able to talk to CEOs, of course, yes. But at the end of the day, just because you think somebody knows something, unless you know that, hey, we're about to report this, this is what has been happening, you can't force money, dollars, into that company because you come out with a new product. You don't even know if it's going to work. Or we're going to invest in this, that, and the third. But that's public information, where the government's money goes. So there's a difference between, like, having consistent raised guidance and consistent money and, like, just, you know, running a great business. Like, having a good product that people want to buy. Like, you can't inside trade that. You can inside trade other things, but like acquisitions that are going to happen in the future, this, that, the third. But I was saying, I'm like, guys, the playbook is simple. Good companies on the low, buy leaps, stuff them in the long term, see what happens. That's all she's done. Apple, NVIDIA, just an example. Pulled back, went long, bought leaps. Winner, 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 right? That's it. And yes, those options. So they tried to say, Warren, how did she beat Warren Buffett? I'm like, bro, first off, there's a difference between trading and investing. It's very unlikely you're going to get that 10-bagger, but you can. And you will, you know, throughout time. But you're not going to collectively get 2,000 bangers, 1,000 percenters, 20 baggers, right? You can do that with options. And that's what separates trading from investing, right? Is that leverage aspect that really accelerates your income. And I'm like, guys, just do it. Like, stop with the insider trading, because it's not, the point is it's not doing anything for you or me or them. So look at the playbook. What is she doing? Because it's all public information, and repeat it. We bought this. If you didn't buy it, we bought it. I bought it. I gave it to us. I said, guys, I'm buying it. We also traded it 3 separate times, and this was on the watch list this morning. It's pulled back by leaps. Winner, 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 winner. This is the Nancy Pelosi playbook right here. Just because they had one bad quarter does not mean that money is not flowing into Starbucks. They have not necessarily a cult, but Starbucks will always have a line of people at the counter every single day. All right, so there's money there. And here it goes, breaking out the highs. So
Plus some data out a few moments ago, as you just saw, existing homes missing expectations for the month of April. We'll get a pulse of the housing market from the CEO of Compass.
And Amazon getting ready to hold
I know somebody in here bought Starbucks with me, I thought.
efforts ahead of it. Big show still ahead. Squawk on the street. We'll be right back. Don't go anywhere.
And this is why I also say, keep an eye on some of these earnings, some of the earnings from last week that nobody's talking about. Because as the herd leaves, these names really get going. And institutions don't buy or sell them the very next day or 2 days later. They wait until everyone, oh, we just forgot about it, right? That sentiment shift. And what do? They do things like this. Let's just run Tesla up. Let's do a short cover. Johnny just got margin called. Let's run this thing up. Have everybody talking about Tesla while we slam Exxon, right? And we run up Starbucks. And we might just take JP Morgan with them. We might. But more so earnings, right? Palo Alto. MU's a good company. So, can I, just so you guys know, or I just want to give you guys some information. You know, as far as that PE on ARM and like the amount of money that the earnings on ARM isn't that great. It's not that it's not that great, but I don't want anybody to get it confused that without ARM, there is no Taiwan Semiconductor. Without ARM, there is no Qualcomm. Without ASML, there is no Qualcomm, there is no Taiwan Semiconductor, there is no NVIDIA. Okay? So, if you hear anybody, I'm not saying that there are, I just want people to understand what exactly ARM does. ARM designs them. They give them to the blueprints, and the companies like Taiwan Semiconductor and Qualcomm are the ones that produce it. Okay? They get the blueprint, they set up their little robots, and they produce it. And ARM helps them on how they produce it as well. Alright, Qualcomm has a new chip. So, look at that 50-day rejection. So, I just want you guys to understand the importance on ARM and why it's up at highs. Yes, because the sector is up at highs, but ARM plays such a big role that I don't think people know about. There's few that do know. All right, there's a few people out there that do know how this stuff is ran, but you know, it's kind of hard to just have. It's kind of hard to build CPUs and GPUs without knowing how you're going to build it and how the design's going to be, because you don't know if the information and pretty much electric, whatever you want to call it, how it's going to flow throughout that CPU and GPU. All right, I feel like from the stuff that I've watched, there has been I think they're about to start changing. They're trying to find a different source other than copper, and a different way, because we've gotten to the point that that's what we're going to need to take it to the next level and to take this AI stuff to the next level, right? As far as speed, like we've pretty much maxed out the capabilities on how fast that information and everything can be placed and stored and moved, you know. I wanted to watch with you guys that semiconductor, you know, short on this stuff, and it gave you a broad, like, you know, understanding of how this industry works and like where things are at. Like, it was really cool. And I didn't really get any feedback on it, so I never pulled it up. But that's something we could always do going into NVIDIA earnings. And I feel like for anybody that doesn't know or would like to learn more, look at fucking Starbucks, guys. Look at Starbucks. Look at this thing, guys. I told you, it was setting up beautifully.
I think he does. Yeah, he's going all chips in on autonomy, and I think he sees that competitive battle coming, and the battle may not be EVs in the future. It may be shifting to autonomous vehicles or AVs.
I gotta post it.
What happened to the EV future?
I think the EV future is alive and well. It's a $70 billion business already in the US.
EMPH initiated with a
EMPH.
sell and $45 price target by Gordon Johnson.
Remember, Hertz unloaded tens
Echo
of
November
thousands
Papa
of EVs
Hotel,
already.
EMPH.
EV sales shot up 45% as a result. And so when you add new and used, you've got significant EV demand. And that'll shift or rotate back to new EV demand as that one-time
I think so,
event.
because there are questions about whether
There are
that
questions, but when
people
you
want
look,
that.
like EV demand was up again in April, and that doesn't include the used cars. So once the used cars sort of dry up, that demand will rotate back to new.
Can we ever do EVs like they do in China at the same price point and the same?
I like to just mess around with them, guys. I like to mess around with them. I like to mess around with them.
Both options. Have the ICE business transition to EV.
Let's look at some of these names that are trending today. Let's do it. Let's do a little. Let's go have a look here. No. Shit. All right. Let's go look at what's DJT doing? Is this still going to the downside? No, it's got a nice little pop. Amazon. Let's see here. Amazon's holding up well at the 20-day. I mean, I don't know about well, but it's holding up at the 20-day moving average. And I mean, really though, you know, it's a good sign that it's holding here, but it held before and then it just fell off. At the end of the day, it's still just a lower high. It's still just a lower high. I mean, let's just call it for what it is. Wait, what the heck is going on here? I might already be done today, so what I'm going to do is we'll go through some charts here, and if you guys have questions, throw them in the chat. If you could, hit the like button, subscribe if you guys want to donate. If you guys made any money today, if I've helped you in any way, feel free to donate. That's down below in the description. Help get each other out of the trenches. Let's do this. Just try and get up out the trenches, y'all. Secondly, you know, if you have a question, post it in the chat. If you have a ticker you guys want to cover, throw it in the chat. Let's see if we can... Let's see where the S&Ps are and the Qs. Let's go look at the overall indexes. I mean, the morning is pretty much done. I'm going to have NVIDIA's earnings live here. I'm going to have NVIDIA's earnings live. I'm going to make, if you guys want to make it with me, that's cool. I'm going to make the, whatchamacallit, the thumbnail. I got to do all that. Got to sign up, see what time it is. We're going to host the earnings call live with no interruptions. Excuse me, and Starbucks is still on a runaway freight train. Runaway freight train.
Sources that from Reuters. Kilo Michael India, KMI.
All right. What is Nike had a nice little run there. Let's look at Walmart. Kind of just double topping right there. Target. All right, kind of rejecting. XOM, we already know, pulling back. Let's look at Oxy. Not pulling back as much. What else do we have here, guys? You want to just check out AMD? Just hanging out. Not really doing too much. Oh, shoot. Coinbase.
Crude, a build of 1.825 million versus a draw of 2.4 million expected. Gasoline, a draw of 945,000, less than the 1.6 million.
Watch UNG, guys.
And distillates a build of 379,000 versus.
We actually look at UNG. Do you remember back here on that Friday when I called it out? And yesterday I was like, yo, why did it? Because there was information that Biden ended up doing more, I think it was like 1 million barrels or something like that, to keep gas prices down. Look at that. And I really think this is because of Ukraine and Russia, and it's starting to come to a point where China's reopening, and it's like, okay, like you're coming to the point where this energy is being used up. You have multiple things going on here. You have a lot of operations running all at once. And you have the U.S. really low unemployment. You know, you have a lot of construction, a lot of housing underway, a lot of things going on, even around the world. So, I think, you know, I mean, honestly, I'm an idiot that I did not take this long. I am. I can't believe that we missed it. It's not that we missed it. I just failed to take the position. So this was after the Russia's biggest what is it? GasCon or something? I forget what it's called. Caught on fire, blew up. And they've been going tit for tat. Ukraine and Russia. Again, all those reasons. So hold on one second. All right, we don't really have anybody here, guys, so I'm probably going to call it a day here. Appreciate all of you guys for joining us. I mean, I might. I don't know. I don't know what I'm going to do yet. So yeah, that's that. All right. The gas stuff just came out, and you know, we called this out really early after Gazprom caught on fire and this Ukraine Russia stuff has been going on. What else do we have here? Tesla just hanging on by a thread. Starbucks ripping and roaring. It's already almost at 80. Unbelievable. Hold on one second. Give me 1 second here. I want to see what those are going for. God damn. So they're already up 100% in just in 10 minutes. In 10 minutes. That's it. Yo, they were 20 cents. They're up over 100% in like 10 minutes. Literally. We just looked at them here. It's madness, man. I'm telling you, man. Starbucks has been giving it to you. It's been giving it to you. This is why we don't forget about it and we watch them. So, yep. I don't know. So that's really it, man. I mean, Tesla, little cautious we were. I accidentally took the long on Tesla. I came out with a small profit. That's how losing trades should be. You should lose very little or win. Just because you win doesn't mean it was a good trade. Amazon, which we have up, all on the list. Exxon, XOM, okay. Come on. Whoa. Exxon downside. You got a nice little retest here. I wouldn't trade this. The ATR is pretty much done. It does like 2 to 250. Maybe you get $3 out of it. It's already done $2, $2.50 for the most part. Okay, so that's that. JP Morgan. So we've had a really hot list. Look at JP Morgan running and gunning. We said 200, right? We are watching for a rejection off of 200 or a break above. We have now broke it. Here's the thing. Did we break it on an increase in volume? I mean, the volume's consistent. I don't know about an increase. You know, what is this? 33.3. What time is this? I'm just trying to figure out the volume. 10:30. Yeah, that's a lower volume bounce. All right, looks like Tesla, or not Tesla, I'm sorry. JP Morgan's headed to 201.91. 201.90. Look for that to, what is that? 202. Hold on. Hold up, gang. It's a nice break. So I did a good job today finding these rippers, right? Relative strength. That's what we love. That's what I love to look for. But this one has low volume, so I'm sorry, 202. Watch that area. It's like you could call it, yeah, call it like 202. All right. Right here. Dude, what is going on with my charts, cuz? Damn. This is lower volume. Be aware. Look for that 202 level. Listen, if you're new at this, or if you haven't spent very much time trading, make sure you understand the actual movement and understand, like, if on average, like even for the past year, 2 weeks, a month, I don't care, whatever. I don't care if it's like 5 days. On average, this stock moves $5 to $6, and you've already moved $4.50, and you got $1 left. Chances are you should just leave that thing alone. All right, and wait till the next day to come in and say, all right, you know, if we have less volume, right, that $6 trade or $6 move that was yesterday, maybe we get 3 out of it today. We at least could get half from high to low. Are you buying the dip or are you selling the rip? So, and when I mean selling the rip, it's like going short. So, you know, keep that in your arsenal. All right, and then use from where you are, wherever you open up the next day, to say, all right, if we pull back off the bell, if we pull back into this area, like $1.50, it looks like, you know, I have that $3.50 going into resistance, and that should be about the ATR, so that kind of sticks to my plan. If I get long down there, you know, so with levels, obviously, you know what I'm saying. Can keep metal on watch. I'm so pissed, man. I'm so pissed that I just spent my time watching Tesla this morning instead of being focused on some of these other names. But it's all good. It's all good. I just wish there were more people here. You know, so if you guys could, you know, run the stream up, subscribe. We get to 1,000 subscribers, I'm doing a giveaway, and I won't ask to subscribe or like anymore. Secondly, I don't know. That's all I got. That's really all I got. I'm kind of just going to hang out from here. I have to make a thumbnail for NVIDIA's earnings today. If you guys have questions, post them below. If you guys want to talk about anything, we can go through some charts if you guys want to. Not sure what everyone's looking at. So Meta, let's look at Lulu. I know there was news with Lululemon yesterday with the CEO leaving. Damn. I was charting this out yesterday, last night, and damn. I want you guys to know something as far as NVIDIA's earnings too, okay? I want you guys to understand that the past quarter was their first quarter that was lower than usual, and let's see if we stick to that path. God, this fucking girl is so fucking hot. All right. NVIDIA. All right, we can always go to do some AI stuff, look at probabilities, look at earnings, what expectations. Here, let's do that. I'm going to show you guys what I'm talking about here. So there we go. We got that. Look, we can create our own stuff like this. We talked about it yesterday. So let me go back. So look at their earnings right here on NVIDIA. All right, let's add it up. This is a huge rollover, and I still think even if the earnings tonight come in a little bit below, I still think they're still crushing, guys. 50 cents. 58 cents. I'm sorry, I'm going to be exact. 51 cents. 58 cents. 88 cents. $1.09. 2.70. 4.2. 5.16. That range is kind of slowing. You were seeing here, you had like pretty much just from 2021 into 2022. You had 100% growth rate, or EPS, I should say. You had 100% rate of change in EPS. So, $1.84. So let's see. Let's see what we got. All right, let's go look at this real quick. We'll look at earnings. So NVIDIA is expected to release its earnings report today, which I'm gonna make a whatchamacallit. If anybody wants to help me and join along, you're more than welcome to. EPS 552, which would represent year-over-year increase of 406%, guys. 406%. That's wild. Analysts are predicting an EPS of 552. 400% year over year. From last year. That's insane. 556, 516. Okay. So about, 45 to 50 cents more. Revenue. They're expected to bring in 24.27 billion this quarter. This quarter. 25 billion this quarter. Think about that. Earnings. For the fiscal year, earnings per share is anticipated to be about $25.15 compared to the $12.05 a year ago. See, this whole company has completely just increased at 100% all around, right? From their earnings, their EPS, their earnings per share, which is EPS, just the revenue. They've just NVIDIA is a monster. That's all I'm going to say. All right, the market is closely watching NVIDIA's performance, especially regarding the H200 chips and the transition toward the new Blackwell architecture. The company's recent history of its earnings have shown remarkable growth, and there's a lot of interest in whether this trend continues. Sorry, that sounded like a plane that was really low. Will continue, particularly with the AI-related spending in major companies or customers. If you guys saw what Microsoft was doing yesterday, you would see why NVIDIA probably is not going to have a bad earnings yet. Not yet. I don't think they'll have bad earnings ever really, but a sign of that slow of growth, right? Microsoft is ramping up, and they need those things. They need NVIDIA. All right? Real quick, just because I saw this, all right? Oracle. I think we have to watch Oracle, guys. Oracle just tested that prior resistance level. Look at this pattern here. Look at that inverse head and shoulder right there. Left shoulder, head, right shoulder. I don't think you guys need any showing of where the inverse head and shoulder is, but you know, in case there's somebody that's on here that doesn't really have any idea. All right, Oracle's pulling back here. That's not a good look. That's not a good look. I mean, I'm gonna be honest. I think they do pretty well. Let's see here if this thing breaks. So let me go back to NVIDIA. I'm going to keep an eye on Oracle because, you know, Oracle's not necessarily AI, but they're a cloud-based, and how that would affect, because I feel like if you want to store the data and you're using these things, you're going to use Oracle. So it's not really an AI play, but all right. Oh, and yesterday when we closed the stream, guys, monster freaking tornado when we were watching that towards the end of the day, it ended up taking out a few of the turbines. Like, I'm going to show you guys this video, and it's insane. It really is. It's insane. I want to look this up though too. For the stock rise post earnings, NVIDIA will likely need to comfortably beat Wall Street estimates for quarter and provide guidance for next year that's higher than what an analysts are projecting. We know that. We're not rookies here. However, any slowdown in AI stock mania or more cautious market could lead to post-earnings sell-off, even if the earnings are strong. Keep an eye out for their official release after the market closes today for the full details. Learn more. What time?
So I'm thinking of the journal piece last week about softness in some cities in Texas and in Florida, and then I think the Washington Post followed with their own report. Does that account for some of that, where these price drops are happening? You're seeing more price drops in the South.
2 p.m. Pacific time, 5 p.m. Eastern Standard Time. Sweet, thank you. Thanks, gang. Thanks, gang. You're the best. Alright, so I just had a few things in mind. So I would like to show you guys yesterday what happened right after I shut the stream down. Okay? I'm going to show you guys what happened right after I shut the stream down. Microsoft's development thing is on right now. Wait till you see this bad boy. Wait till you see this bad boy, guys. This thing is insane and it's destructive, powerful. Look at the vortices. Okay? Let me... Am I not connected? Hold on. I am connected. Maybe there's no sound. Maybe the AirPods died.
100 basis points to 7.5 this past month. And so also, when you think about April reflects the mortgage rate environment over the prior 2 months. And that environment.
So this was the footage from yesterday. Look at this thing. This thing was mean, y'all. It starts out okay. Look at the debris. So there's no sound. This was right after we closed. And I said, guys, we're going to get a tornado right before the bell rings. Literally within the 2 minutes of the bell ringing of the market closing, we got one. But right after we closed and shut down the stream, look at this bad boy. Wait do you see the vortices running off of this thing. And that's a shame. Look at the house. Just, this thing picks up steam. And you can see it right now. Look at 1, 2, 3. Look at it. 3 separate tornadoes. Look at it. It's picking up steam here. Look at this. I don't know what's going on in that house, but that's not a good look at that garage. I don't know if that was like cement or smoke. I don't know what that is. That's insane. But look, it takes out these windmills too, guys. And the drone. Oh, so they found the drone. So the drone got lost yesterday. Yo, this thing takes them out. Takes out these women. Look at these vortices running off here. 1, 2, 3, 4. It's showing you the violence and how fast it is. Like, just the wind speeds. Hopefully it gives us the whole thing. Yo, it takes them out. So these guys are like right along here. Look. It just took that one out. Right? It's not even hitting it. Not even hitting it. And look at the surrounding area, how it's just pulling in that air. Like, it's insane. The tornado's not even on it, and it's just ripping it to shreds. Look at the trees. That's a shame. It's in the house. The house is in it. Look at the gap. You can see the gaps in here. These little... It's just insane. This was literally right after the bell. If you were to saw this in real life, you know, with it, it was just insane. It really was. And I'm like, damn. Starting to break up. So yeah, that was yesterday right after the bell. Now again, I'm going to get back. I'm pretty much done for the day. I don't know if the markets are really moving now. NVIDIA is hanging out below here. It's not ironic that it's tested highs. Bro, it was just insane. It was so insane. SPY, look, we're just sitting right pretty much just above where we opened up at. Oh shit, watch out, man. We might try. We might try and run for yesterday's high. It's going to be hard to do with NVIDIA. Let's look at Apple. So Apple's kind of just hanging out above yesterday's high. Watch for a pop here. Microsoft at yesterday's high did not get up there and hold it. So we did NVIDIA, Apple. Alright, we said JP. Look, there's your retest of 200, guys. You just reclaimed 200. Even though it's low volume, it's really low volume today on JP Morgan, it feels like. But, you know, you can't ignore that type of trend, guys. Watch 200 on NVIDIA. Unless there's something I'm missing here. It's a nice bounce off of it. Right, that's a nice bounce. Look, it's watch it sit here at 200. Give it a few minutes. Three minute. Look at that previous high there. This could be a nice... It's got a hold though. I don't like the volume on it. 32. I would give it that little bit of room there. It might hit VWAP, or this was just a failed attempt to hold 200. And look to see if 200 again acts as resistance. Because on the daily chart, and I don't know why the daily chart keeps messing up. Right there. Yep, that's it. Alright, so look, the daily chart keeps messing up. One of the best daily charts, guys, that I've seen. All right, like that I found this morning, and we've been watching this for a while, ever since earnings. So look at this, okay? Look at this setup. Now this is as clear as they come. Double top, bottom right chart. Double top, boop, boop, double top. We fall off. Market pulls back and everything. We rally out to new highs. That meeting Monday, it just falls back for no reason. Like Jamie Dimon was talking about regulation in the government, and he's correct. I guess it spooked investors. It spooked shareholders. I don't know. Maybe just a lot of profit taking just kind of triggered a sell-off. I don't know. But, you know, he's absolutely right. Anyway, so look at this prior double top, and we break above it. We did not hold it, and now we're bouncing into that previous resistance level. Are we about to make that resistance? Rates, we were on the back end of rates, of this rate hike cycle. Once they start pulling rates back down, that means their earnings are going to be affected. All right, the banks they're still going to do good because it's not like the Fed's just going to cut a percentage point at, or you know, a percent at a time. They're going to cut 25 basis points, 50 if needed. But that's a nice break and retest, right? You broke 200. You should have held it as support. And now you bouncing into it to look for that rejection. Yesterday, I went long into 200. I took it off pretty early because it just wasn't working for me. And I was correct because look at that pullback and then it rallied. So that's how you get good at winning, right? That's how you get good at, you know, you're never going to know, but the longer you have time in the markets and time watching the charts, okay, you're going to get a feel, right? And it didn't feel right yesterday. So I got out, small profit, and then it pulled all the way back. And then I look again at it, and then it's back at 200. So, anyway, JP Morgan, I'm going to watch this 200 level. Do we reject it or do we rally? I brought this up this morning, or not really this morning, but when the bell rang. So there you go. You're already at that 160 level, guys. Already on mRNA. All right, relative strength. This is what we want. Look at the huge breakout. Huge, double, triple the volume, and you get that continuation. This is why I started this channel. This is what's going to give us the stake. This is what's going to pay for family vacations, helping other people. Finding these and knowing them. I gave you guys Starbucks this morning. S-Bucks. Look at this. Trending. Look at those candles. There's hardly any wicks. There's double the volume. There's really nice volume here. Right? The average volume here is around 135,000 versus 50,000. So you got double, triple the volume. This is how we find them. XOM. Pulling back, Jack. You know, this one isn't really, this one's already done with. But look at the volume. Right? Look at that. So, even if we can set some scanners up, whatever, this is how we eat. Just makes it easier on us. I traded Tesla today. It's just consolidating. Got a bunch of people fooled, I feel like. I just, you know, it pulled into this low. I accidentally got long. I did not want to get long, but I did. Took half off, and then took the other half off for a profit. So small loss on the first one, like a 5-cent loss on the first one, and it was like a 15 cent gain on the contracts. It's like a 145, 150. It's like 150 entry or so, and it got out at like 165, 164 or something like that. Don't quote me. So I was too busy trying to get out, and I wasn't really watching the stuff, so I had to go back and look at that. But so half of that lost a little bit, the other half made just a very little bit. That's how we make more when we're right than when we're wrong. I didn't like it, and I didn't even want to be long at the time. It was just an accident. I just accidentally hit the button too many times and accidentally hit it. So there's that. All right, let's go here. All right, we could go back again. I'm going to have NVIDIA's earnings live. Amazon was another one. We said Really, I said watch one. No. All right, SPY, you're getting that bounce here on low volume. See if that rejects up there. That could be like a failed breakout attempt. Watch the cues. Oh, the Dow. We said the Dow had the best setup of the day. What a beaut, right? Look at that support level here. If we break this level, you have some room. Like, you don't have anything stopping you. So it's not like you'll need a ton of volume to get down there. Anyway, if everybody's done trading, I don't know if anybody's sure. Where are you guys at? If you guys could hit the like button. Never mind, everybody already left. Fuck. There goes Tesla. Alright, so I don't keep people. I gotta learn how to keep people on the stream. They come, and then they go. Alright. It's all good.
Why former Fed official Vince Reinhardt says investors are wrong about a September rate cut.
Then Redfin CEO Glenn Kelman on when to expect relief in the housing rental market. First up, though, on stocks, we're a little bit lower right now. The S&P kind of unchanged. So is the Dow. The Nasdaq higher as tech outperforms. Apple's higher. Some of the chip stocks as well. The 10-year note yield 4.4%. It's been more benign lately. Let's bring in CNBC senior markets commentator Mike Santoli. It's like a pre-Fed meeting, but it's a pre-NVIDIA earnings report.
And it's lasted like 2 days into today. I mean, it's remarkable how much this
All right.
just sort of stay in suspended animation at all-time highs.
Let's see here.
The market, if I had to really
Oh my God.
decide one way or the other how it's
I am not.
it seems like it
I don't want to see that.
to get out of the way and have permission to try the upside of
BTFD is a granny. Whoa.
rallies, but who knows? I mean,
Hold up.
when NVIDIA's $2.4 trillion and it's indicated to
10-year
swing around
bonds.
$200 billion, no matter what the number is, one way or the other, it obviously can have an impact. Different setup versus last NVIDIA earnings report in February. Back then, NVIDIA itself had pulled back like 7% into the number. The S&P was down a couple percent off its high. So it seems like we're going into it maybe with a little more.
What is going on with my AirPods, bro? Did it die?
Not as reliant as it was back then.
Hold on, y'all.
The Max 7.
I'm trying to get something up here.
People talk about what's on the line, the implications for the quarter.
Is the same thing as being wrong.
They point to tech, they point to the market.
Okay.
They start pointing to data.
A lot of people say things like that, but then don't look at market history. And don't look at what those who have really had outsized returns themselves go through as they perform analysis and try to identify where a potential endpoint might be for the markets. I'm sure you are familiar with the name Michael Burry. You know, the guy from The Big Short. You all realize that Burry called the housing crisis and crash really early in the context of short-termism, right? Article from Yahoo Finance, Burry gained fame for his moves during the 2008 crisis, a severe downturn that began with a U.S. housing bust. Burry predicted a collapse in residential real estate as early as 2007, then shorted a number of subprime deals through the use of credit default swaps. And he lost a lot of money waiting. He apparently was wrong until he was right. Just because something doesn't happen on your time frame doesn't mean the person that you're criticizing is wrong. The distinction of whether something is right or wrong is a function of where you end a chart. Good example of that is what happened to the S&P 500 in the lost decade. The National Home Price Index peaks in April of 2006. The S&P keeps running. A lot of people are saying, housing is going to create a crisis. Housing is going to create a crisis. Housing is going to create a crisis. Those people are wrong. They suck. They don't know what they're doing. Look at the market. Look at the market. Oh, they're wrong. They're wrong. Early is wrong. Early is wrong. Until the collapse happens. And then you know what? All those people who were just throwing tomatoes and attacking the person who believes in a certain thesis suddenly say, he was right all along. I knew it. I knew he was right. Early is wrong. In the case of 2008, 1 year took out basically a decade of performance. Who gives a damn if you were early? You were still right with magnitude. This is like insanity to me that people really think like this. As if it's like a criticism that if it doesn't happen on that person's time frame, which by the way is different for everybody. Okay, but most of the time it's short term, let's face it. If it doesn't happen in your time frame, well then that person is wrong and should not be listened to. Their analysis is worthless because price is truth. Nonsense. Price is not truth. Price is a reflection of all the wisdom and ignorance of the crowd at any moment in time. Price is a reflection of overreaction and underreaction. And that can take time to play out in terms of knowing what the real truth is. Another line that I often see on social media, which drives me crazy, which is just shows you how people don't think beyond a headline or a single sentence. Markets can remain irrational longer than you can stay solvent. Really? That only applies if you short. Which is why I'm so against shorting. If you're bearish and you're early and wrong, you can still make money while being bearish by being long only the things which tend to benefit from heightened volatility and give you a chance to compound even while waiting to be right in the eyes of the people who don't know what it's like to be in your shoes. You can be long gold, have a chance at outperforming, like this most recent cycle. You can be long treasuries, which by the way did not work in this cycle, but usually tends to, and because now treasuries have a yield, you can definitely wait out in treasuries being in quotes wrong for your bearish thesis to play out. You can be long the dollar. That's worked really well. You can be long utilities. Yeah, you're going to lose when the market goes down, but you'll lose less. And by the way, even if the market doesn't go down, you can still outperform, just like you have this year since February. What is this market's going to remain irrational longer than you can remain solvent? It only holds true if you short. Like, this is just fact. This one also is an interesting one. Far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. Okay, same deal. That only applies if you're short or if you're in cash waiting. If you're in defensive sectors, high-quality dividend plays, yes, they will lose money in a correction. But if you're getting ahead of a correction and simply downshifting your risk in your beta, you're not losing money waiting. You might actually be making more money while waiting because rotation is taking place beneath the surface as smart money, like I believe it is now, is positioning defensively. So before you use these lines to attack those that have analysis that you disagree with, where that analysis has not played out in your time frame, maybe you should think a little bit more. Maybe you should think about what the implication is of time and how you execute in the time period where it may still turn out to be that your thesis was right all along. Markets go up gradually, they go down suddenly. It's been a while since people have been reminded of that. I think they're going to be reminded of it sooner than later. But hey, guess what? Hey, I've been wrong, right? I've been wrong. I've been wrong in the credit event thesis so far. Been wrong on the reverse carry trade so far. But if I'm wrong by a year, and the market does give back a substantial amount of gains, if not all of it, from 2023, am I really wrong? Because let's go back to that point about the chart, okay? The thing is, if markets keep going up, and you're making money, and you say, man, you're wrong. Your thesis is wrong. Being early is the same as wrong. You know, the thing with that is that as the market's going up, you're probably putting more capital to work, right? You've got an income. You're putting more cash into equities, into the S&P. Early is wrong. I got to keep on going in. I got to keep on going in. I got to keep on going in. Dollar cost averaging does work over long, very long time periods. But most people tend to buy at peaks. separate from dollar cost averaging. And even if they're dollar cost averaging, they do that in advance, and then they have more capital risk at the moment when the turn happens. Early is not wrong. Early is a part of this business. It's a part of the game. You want to be late? Let's see how your performance is when you're late. I'd rather identify conditions that tell me to slow down before it's too late. I'd rather be true to my analysis than bend the knee to those who don't understand market history, who don't understand how quickly gains can evaporate, who don't understand you can still make money while, in quotes, being wrong, but just not shorting. Things take time to play out. The thing is, when you're early, time's on your side. And time is undefeated. Thanks for watching.
It's time with Michael Gayed of the Lead Lag Report for your Morning Feud.
Monday, May 20, 2024. Welcome to another edition of Morning Few. These daily episodes, these short clips I put out with things that are on my mind. Today, I want to address one of these comebacks that I often see when it comes to those who I think are largely amateurs when it comes to trading and investing, which is this idea that being early and wrong are one and the same. This irks me to an incredible degree because it's just not true. I'd rather be early and wrong than late and right, because at least I can manage risk on a go-forward basis. I can't go back in time. Now, this is not a quote that's new to the investing community. If you look at a quote from James Allworth, basically the same concept here, being too far ahead is the same thing as being wrong. Okay. A lot of people say things like that, but then don't look at market history. And don't look at what those who have really had outsized returns themselves go through as they perform analysis and try to identify where a potential endpoint might be for the markets. I'm sure you are familiar with the name Michael Burry, the guy from The Big Short. You all realize that Burry called the housing crisis and crash
weekly charts until we start to rotate and consolidate to some moving average. And so the way I approach these markets is I have my process every single night. It's updating one day at a time, very much a Bayesian type of approach. And so, for example, I could tell you with these metals, the gold, the silver, the copper type of thing, they've had a large standard deviation move, this significant consecutive closes on one side of a short moving average. The first close below that, all my models will still be a buy. So, it's just what is the play for the next day? And then, of course, on a broader time horizon, if we're updating also our daily models, you have important things like daily, weekly chart formation. So there's different levels. We can trade on a intraday type of time frame, of which these indices are particularly well suited, meaning the S&Ps. B, you can trade on this 2 to 3 day time frame or hold for a week type of time frame with some models. Some of you are familiar with volatility breakout systems and so forth. And then, of course, once we step out to look for opportunities on the daily, weekly type of structure, which I also do, I have program 1, program 2, program 3, you'll see that the higher out you go with your lookout period, you have lower frequency of setups. So on this daily, weekly, the type of run that we've got now underway, you might only get 2 or 3 of those per year. But regardless, it's always taking it one day at a time? Are we starting to see some price bar overlap where the market is coming into balance with market profile speak? And then even though I do read about all the drivers for this type of stuff, it never governs my trading decisions. So I really don't care what the Fed does or what they say. I don't have a TV. I don't look at news. But it's still for my own intellectual curiosity and purpose. And then for me, it just is like, I get it. Okay, that makes sense. Because when you start to look at news or fundamentals or macro, there are always two sides of the equation. I don't purport to, be proficient in that area. And that's why I do like to look at Lynn Alden's work on a longer term basis. She puts out a free monthly newsletter.
And then when you're, so how do you determine your optimal like entry and exit points for your trades if we're going to talk trade execution here?
Well, you have to understand that, of course, if you're really short-term technical, say, for example, day trading the S&Ps, you have a little bit more to work with in terms of market internals and time of day functions and how is the market trading the hour before. Are there patterns in the DAX that set the tone from the overnight type of trading, because that will follow through in the US morning session for the S&Ps. Is it, how are we trading outside of that first hour's range? Is it a push into Europe close and then consolidate? So there's its own unique rhythm with these indices. In terms of the other models, if it's a volatility breakout type of model, there's specific ATR functions that we can use for entries. If it's daily type of models, you can either I tend to be more aggressive in terms of trying to buy around the previous day's low. For example, if we've had 2 days high to low and I'm looking to initiate a position, I might look to buy below that previous day's low. So for example, if you looked at Nat Gas, we just had 4 days low to high. On the daily charts, we had 1 day high to low. Therefore, my model would say, look to be a buyer below that previous day's low. So the context for entry as well as trade management very much depends on the overstructure that you're in. Are you in a trending market, where a channeling market, which you don't get that often, but they're probably the easiest to trade, or are we in a consolidation mode where we can get false breakouts? That could be the case, with these metals as they start to consolidate. We'll have to see. But so the market structure really determines, the type of entry and exit. And so above all, once you're on a little time horizon beyond the 5-minute, day trading type of stuff, try to get the main idea right. That's what I always tell, people around me. Is it going to be a low to high day, or is it going to be a high to low day? Or is it going to be a rotation type of consolidation day? And if you can just get that little nitty gritty down, and then that goes a long ways towards, is it okay just to jump on board, or would it be better to work with the market and look for a reaction to initiate on?
And then Anthony, kind of the same question for you. I know you put out something every morning kind of on where you see the market. So how do you determine the optimal trade entry and exit points?
First off, it's great to always hear Linda's perspective on things. I think that she's one of the greatest minds out there in trading, and I always love hearing her thoughts. And I just want a couple things, how she talked about with the macro on two sides. There's always two sides to it. We all traders, if we try to focus on macro, it's just most of us are going to be more technical and it's going to confuse us. And the way I always look at it is the technicals get me into trades. The macro helps me hold trades. It helps me with position sizing. If the macro is coinciding with the trend, like as I'm trying to buy indexes, and how Linda talked about from low to high type day or high to low, or is it consolidation? If I'm buying weakness and I know that I'm with the overall trend and I believe that this is a macro environment that supports a rally in equities, or if it supports a rally in metals, that tells me I want to trade more aggressive on the buy side, and I'm going to try and hold a long much longer and to a target than versus if I'm trying to play short against a trend where macro would contradict that type of move, right? And so I think when it comes down to it in this environment, I stay very true and into the markets that I'm focusing on. I don't focus on too many. It's maybe Nasdaq, Russell, S&P, oil, a little bit of gold, and maybe I'll venture off into some other markets very rarely. But I just try to find the macro environment that's supporting them, which I think is bullish really for those markets right now. And when I look for opportunities, I'm going to be more aggressive long, and I'm going to try and rotate out of a position and try to hold the core position as long as I can. I'm a short-term day trader, but I someone who really focuses on one side of the market. I'm not trying to trade both sides too often. I think that most of the time is really not good news for most traders. You're not going to be able to pick too many points throughout a day to where you're going to be able to make money on both sides. So I just try to find where macro is in overall in the marketplace, and I see if it coincides with technicals, I favor that side. I adjust position sizing. If I'm fading that, if I'm fading trend, if I'm fading macro, then I'm just smaller with a tighter stop.
And since you brought up technicals, let's talk about what are some of your favorite technical indicators and why, and how do you incorporate price patterns in your trading decisions?
I don't look at any real price patterns. I don't look at, like, if I see an upside down head and shoulders, I typically, I try to remove myself from thinking that way. I actually bought Tesla when I saw that upside down head and shoulders. It got stopped out. That was maybe a couple months ago. But, my favorite indicators are Bollinger Bands, 20-period, 3 standard deviation on the daily. I like short-term simple moving averages to gauge trend. You also mentioned Menthor Q. They now, for futures, have options on futures gamma levels. I look at those on a regular basis for support and resistance and key 0 DTE. Gamma levels. I think that they have become such an important player in the S&P and NASDAQ. I also like anchored VWAPs with standard deviations because I like to see how the market's rotating. If it's sitting on a 2 or 3 standard deviation day and the market's going higher, I know it's a trend up day, and the likelihood of a rotation lower is less. And then I will use some momentum tools, such as an RSI. And I keep it pretty simple from that. And aside from that, that's pretty much it for me.
And then Linda, same question.
I love ATR functions. So if you were to look at my charts on Twitter or any of my videos, you'll see I use the Wells Wilder's ATR function, stop and reverse. It's a volatility stop and reverse thing to color the bars. And what that does for me is it highlights the swing highs and the swing lows and the patterns if we're in a channeling market or if it's making an ABC. So I love ABC waves, corrections, consolidations. It's probably the best risk reward. So it really doesn't even matter the time frame. If you were to see a daily markup period and then a corrective ABC wave, I mean, it's as simple as that, not to sound like goofy, but it's true. And then in terms of actual lines that I keep on my charts, I use the Keltner channels. Just again, it helps a visual with the eye, see the channels and be mindful if it's starting to push outside those Keltner channels. And of course, a lot of short-term work I use for scanning functions is just that little 2-period rate of change. But that pretty much sums it up. I don't do Fibonacci or Gann or, really put much credence in moving averages other than just some recognition for number of closes on one side of a short side of a moving average. But really focusing on the swing highs and swing lows is my forte.
And let's talk a little bit about risk management, especially for maybe some newer traders. What are your key principles for risk management in trading? That's to Linda.
Well, risk management is such a broad umbrella. It's really first of all, you need to know your own wealth profile. So we always think of risk management in terms of a percentage risk of the account or a dollar risk on the account. And somebody that has a $10,000 account is going to approach it completely differently than somebody that has a $200,000 account. And somebody might only keep, say, $100,000 in their account, but have a net worth of 10 million. Another person might be keeping 100,000 in their account, but have a net worth, much lesser. So it's really a matter of context. The first thing I would say is that in terms of overall risk, I personally manage by the portfolio or by the bottom line. So it's not necessarily one position per se that has the stop on it, because sometimes there's correlation, sometimes there's inverse correlation. And so I'll be much more mindful if that bottom line draws down a certain amount to start taking things off. The second thing is I do think it's important for people to have some absolute bottom line cutoff in your portfolio, be it stocks, futures, trading, long-term, short-term. It doesn't really matter. For example, I have a very good friend who has been in the markets for 45 years, and he has an 8% threshold. So if his portfolio draws down by 8% in 1 month period, he will flatten everything at that 8% mark. And that saved his ass in the COVID sell-off that we had, because the real risk is not an individual position or, just day-to-day trading. It's like protecting against that outlier. If there's a tsunami or a nuclear or an overnight type of event-driven factor, that's what you really need to be more mindful of, is your overall exposure. And then, of course, you don't put positions on unless you can afford to stand, some overnight event shock that could be, a couple standard deviation moves. So these are things that have to be evaluated on a personal comfort level. If you are newer to the game, then I would say you trade on a shorter time frame, because the fewer amount of hours and days that you are in the market, the lower your risk, because you don't have any risk when you're flat or don't have a position on. And then as you're more experienced and perhaps your overall net worth is higher, I think that you can extend your time horizon and have a presence in the market of much longer duration. So those are just some guidelines that I feel are important. And again, if any trader of any
I was saying that I'm here. I'm gonna have NVIDIA earnings on the earnings call live, which I'm gonna make here in a minute. I'm watching a video. I want to watch the second end of this rally. If you guys want to watch it with me, I can always put it on and watch it on here. That's up to you guys. You guys just let me know, and I can put it on here. It's the Gold Rush rally. And I'm just kind of just relaxing for a minute. Just gonna wait until these earnings come out. You got a lot of things running today. You had to be on them pretty early. Outside of that, I'm just watching a video. Just gonna hang out. I'm gonna get ready and make the thumbnail for NVIDIA's earnings call and set that live stream up for later on. And then outside of that, if anybody has questions or needs anything, I'm just watching this video here. If you guys want to watch it with me, I can play it. But that's up to y'all. Y'all just let you guys just let me know. I'm watching this rally here from over the weekend. This was this past weekend, and watching some of the footage from it. So yeah, I'm here.
Having a manual call, trying to get footage for you guys is not easy.
Just let me know. Just letting you guys know I'm here. But I hope all is well. Hope everything is good. Wait, I missed it. Shit. Let's go back here.
the market's tight and I don't need to. So I'm reducing risk as I see fit, and I'm increasing risk, still holding to the 10% for the month. So I might allocate 5% of risk on a day where I think that the market is going to do something, and so I'll trade bigger. And I think that when people look at risk management, they have to look at it from two sides as well. They have to look at not only managing the downside, which everyone talks about, but maximizing the upside as well. I think that for me on a personal level, I don't trade the same size and the same risk every day as I just mentioned. It's about environments. If the market environment is conducive to my strategy and I am doing well, I am increasing risk on a daily basis. If my strategy is not doing well in the current market environment, I am reducing risk. So it is about adapting to the response I'm getting from the market. And my strategy is pretty systematic in terms of what I'm looking for. The discretion comes in with adjusting position sizing based upon market environments. In bull markets right now, I am more aggressive with longs. I'm taking, in certain areas, I'm going to be taking on more risk in certain scenarios if I think that the upside is still in play. And I'm going to take very little risk, if almost no risk, on a short or on a consolidation day. I'm going to be taking very little risk because I'm not going to basically steal from myself. And so when I look at, also the last point I want to make is position sizing. Because futures are naturally leveraged, you don't need to maximize and use all of the leverage that all the brokers are going to give you. I live by the rule of, whatever CME's margin is, roughly, let's just say it's 15,000 for 1E midi or whatever it is for crude oil, right? I'll look at that as one contract. I don't need to use the intraday margin on a regular basis. There are times I do use it because obviously it's available, but I think that most people are trading too big and risking too much by utilizing the leverage, inefficiently. I utilize the leverage it's just naturally leveraged. So you put in your amount in your account, and so I'm already getting that. I'm getting access to the S&P or the NASDAQ or crude oil in a leveraged product. I don't need to maximize it even more by using the day trading leverage, unless there are certain circumstances, of course, where I'm going to do that.
I can add one thing. Because everybody has their approach, and you just have to understand there's not a right or a wrong. It's really what works for you, and is it something that can be applied consistently and systematically. So exactly. I'm one of these people that pretty much does a flat bet size. I trade the same unit size regardless of the environment. It's like one mouse click in, one mouse click out. I very rarely scale in, and I very rarely scale out. So I'm all in, I'm all out, and I do that across a couple markets each day. So I determine my bet size by the average daily dollar range. So obviously the average daily dollar range in crude oil is much greater than that of, say, for example, corn. So for every $100,000 in my account, or 50,000, or whatever metrics you want to use, I might trade one crude oil future, while I might trade 7 corn futures. That would be the dollar equivalent of the move on a daily basis. So that way, I'm never trying to make a judgment. Is this going to be a good trade, or just a scalp trade or something? Because very often, the better trades, the bigger wins, if you will, we can't foresee or predict in advance. So I know I don't want to pick and choose my bet size, because I might end up betting big on the losers and smaller on the winners. So for me, it's just a pure numbers game, playing my system, no scale in, flat bet size, and that's how I treat it.
I want to talk more about that. And I think that honestly is probably the best way for most people to approach it. The way that I look at it is that right now I'm not going to put a large dollar amount of risk on a short in the equities. So for me, it's not that I'm changing it every day. It's just that if the market is bullish and the macro is bullish and I'm getting a bullish signal, my risk is allocated to the long side. I am not going to put on that same amount of risk on the short side because we continue to make new all-time highs. And so that may sound discretionary, and it is, but it is something that I've been doing for 25 years. And so I, on a regular basis, am looking at what is the environment. If the macro supports the technical,
look at this beauty.
I automatically look to see how I can participate on that side with maximizing my risk because my reward can be maximized there. I am not going to take on that same type of risk going again.
Hell yeah. Dude, this 720 is sick.
Yeah, look at this 720 here. The 720 is the place.
Hey, he needs a signal if he's going to cut me off.
And then the last thing is understand your game. And that's how I look at this trading and my systems and my models. They are my game. And I have also internalized them. And I feel very comfortable with them because I've done my own work and my own statistics and so forth. And I find that I can get thrown off my game if I listen to other people or I read news feeds or I have the TV on or something like that in the background. So I try to make a concerted effort of keeping all those outside distractions turned off. And then that's what helps me just enjoy my game in its pureness. So, everybody gets a better confidence level, the more days that you sit in front of the screen. And, it's just working through the challenging times. And sometimes people got to recognize it's great just to take a break for a couple days. You need that because we go snowblind, with the quotes on our quote boards.
Anthony, jump in here.
So for me, how trading psychology plays a role into trading is, well, there's a lot of ways, right? And so let's talk about it from a very basic standpoint. I feel the same way that Linda talked about as you develop a thick skin as time goes by, and in some ways, if you develop too thick of a skin. And what's interesting about that is that what happens is that you start to believe in, as time goes by, as a young early trader, you start to believe in yourself, you start to believe in your system, you start to be able to believe that you have time. And so things will work its way out over time. When you're a newer trader, you want everything right now. You want everything today. And so your mindset is only about the day. It's not about the overall big picture. And it's funny, when you're younger and new to trading, you think you need everything now. And I go back to myself, and I was my own worst enemy, as most of us are. thinking that I needed to make every single dollar I could in my early 20s when I first started. And then here I am in my mid 40s, and now I feel like I have all the time in the world, and I come in and I'm much more patient. And when I take a loss, I go, well, that didn't work out so well, and I'm kind of moving on and healing from it in a much quicker way because I know the next opportunity is down the road. So I think that psychology is different, obviously, in where you are in your timeline. But when you look at a new trader, what you have to think is you have to think you have time. And if you really put the time in to build a system that you believe in, that you have confidence in, and you believe in your homework, you believe in your preparation, then psychology starts becoming less of an impact on your results during the day, because now you see the light beyond just the day. And I think that's where a lot of traders go wrong.
That makes sense. We talked kind of about a lot of heavy stuff. So I want to take a break here because everybody loves trading stories. And give us your best trading story, funniest, most memorable, something for a nice little break here. Go ahead, Linda.
Oh my gosh, I got to think about that one just a second here.
I
got
know,
a lot
Shai,
of ones way early on.
You're putting me on the spot now. I'm going, oh man, I can't think of one. I got to come up with something. Luckily, Linda's first.
I had written a lot of trading stories in my Trading Sardines book, and the ones that are the most memorable are the ones where, some unfortunate incident is coming and biting you in the butt. So, the good thing is that despite all these random things that can happen to us, and truly random, the markets offer enough opportunity that you are going to survive. I'm still here despite these horrible, things that happened, like putting on my largest position ever in the S&Ps and the Russells. I think I was long like 1,200 futures in the index futures. And this was, for my fund, of course. And I had a major position on in the Russells, and I put them on Friday afternoon, right before this was in, the debacle 2008 and stuff, before the Fed came out and said that they were going to step in and intervene, in which case, I had left the last hour of the day because I had a dentist appointment. And, my colleague is calling me as I'm sitting in the dentist's chair. Of course, I can't talk at all, and letting me know that the SPYs were up radically in my face. Of course, my position was to the short side, and the S&P futures gapped up 40 points on Sunday night. So that was like about a $4 million drawdown in just a few seconds. And we traded our way out of it. And then the S&Ps came all the way back down because the technicals were not constructive at that time. But you do what you can. It wasn't funny at the time, but it's like, okay, breathe. What do? We get smaller, reduce our position size so that we can still trade, because again, once you have that volatility, there is opportunity, but you can't take advantage of that opportunity if you've got your hands tied behind your back. So get back down to the level where you can operate mentally and, from capital requirements and so forth, and then get back to work, put that nose to the grindstone. And, we ended up the month plus. But that's one thing you have to understand about this business, is that these fat tails out there, I'm not going to tell stories of fat tails to the long side, because nobody likes to hear those. Oh, I was long GME options or something like that. It's that they are things that we can't predict, we can't see. And usually the big wins and these big losses, that can cause the large standard deviation moves in our account are things that we cannot predict. Humans like to be very optimistic in terms of, our ability to predict the future. And we fall flat on our face when it comes down to that. So I think the main lesson is, good or bad, tail, The best you can do is chalk it up to a one-off, manage it if it's a win, manage if it's a loss, but don't let it destabilize you, and just keep on plunking away the next day, the next foot in front of the other foot, and keep going forward, just one data point at a time.
And I will say, Linda, I read your book, Trading Sardines. It was excellent. It was such a great read. So everybody look that one up. Okay, Anthony, we need a story from you.
So obviously people know that I spent a lot of years on the floor. So there's some stories I can't share, but some of the parties and some of the things that we did. But there is one story that came to mind that a lot of people know who he is too, because I think there was that program or that video called Floored. And so a lot of people may know that meme. It goes out there a lot, that GIF. It's called Bet More, and it was Greg Reba. Do you know which one that is, Shy? I don't know if you know.
Yes.
You always think Bet More. Okay. So I'm in the pit. It's probably 1999, and I'm a member of the exchange at this point in time. I remember I was just starting pretty much, and I was clearing D&G trading, which was 327. It was Glenn Lake and Don Slider. They were that's where my house was, and so there was not many of us, and I was like the newest, youngest guy on through membership, and I'm in the S&P pit, and I'm trading electronically, and I'm still clerking back and forth as I am trying to find my way as a trader. Well, Greg Reba comes into the pit after being on hiatus. Who knows where this guy was right now? I had not met him prior to this, okay? And he comes into the pit, and Donnie and Glenn come to me. They're like, Anthony, they're like, listen, you got to clerk for him. He's just coming back. If he gets on more than 50 cars, let me know. Sure, okay, no problem. Everyone's laughing at me, right? They're like, good luck. You're fucked. You know what I mean? I mean, it's basically, and I'm thinking to myself, I don't know him really. I mean, I've heard of him, right? And for people who don't know, he was partying with Chris Farley. I mean, this guy is he's an animal, right? He comes in there, he looks at me, he's like, okay. And he's like, he shakes the hands of Dan or Donnie and Glenn. They go back upstairs, right? I'm in the pit. I'm walking around. It's quiet. There's really nothing going on. Middle of the S&P pit's practically empty. It's the middle of the day, right? And that's a lot of time when I was clerking after the morning. So he comes in there. He's like, 10 and a half. And he's selling 10 lots, right? Hands giving me a 10 lot. Give me a 10 lot. He doesn't put any names or anything on it. I'm out there looking around to see who the hell he's trading with, because as a trade checker, I'm trying to figure it out. There's not many even people in there. And I see he just keeps handing me cards with 10 lots. I'm like, this guy's already short like 80 or 90 cars. There's nothing going on in the pit. It's dead. Right? Like, they just told me, if he gets over 50, make sure you let him know. And I'm like, I can't. Like, what I got to do? I got to call him now, right? I go and I call upstairs. I go, listen, he's already short 80 or 90 cars. You guys got to come down. All right. I don't remember exactly how many was short, but it was something like that. And they're like, oh, okay, right. They come down. He's in the options pit now. Now he's in the S&P options pit. And they didn't come down right away. So he's in there and he's putting on puts, or God knows what he's doing, right? And all of a sudden I look and I see the two guys who own the firm. They're running into the pit. And they're running towards him, and they run into the options pit, and they look at his cards, they pull them out, he takes the cards, and they have to go and they have to give them to a broker, and they're like, get him out right now. This is his first day back. I don't know him. I don't know anything about this. I'm like, what is going on? They come in and they had to liquidate all of his positions, and all of the locals are coming in there, and they know that all of a sudden now this guy's got to come in, and they give him to whoever, and they're bidding him, and all the locals are getting the edge on getting out with this guy's position. And lo and behold, he came back again. I don't know if it was a week or two later. I think my buddy Perry was the one who ended up clerking for him. I'm like, I want no part of this. I don't even know. Like, this is whatever. And that's what he did coming back the first day from a hiatus. I don't even know if he made money or lost money on the trade, but that was an interesting day for me, to say the least.
That's nuts.
Hey, when when he says trade bigger, that guy, he actually did that. He was special.
It was special. All right, so let's go back to talking about some serious stuff again. Let's talk about a bit about. Well, we'll start with you, Linda. Kind of what is your advice for new traders in general?
Well, from my observations, it takes about 3 years for somebody to finally decide on their trading style and what they're comfortable with, if it's going to be options or spread trading or futures or, day trading or a trend following program. There's many different styles out there. So it's kind of like trying on hats. You have to investigate the model or the style, if it's seasonals, whatever it is, give it a couple months, evaluate it, what is the preparation that takes, at the end of each day, is that working for you or not? And so sometimes, we have to do this through bull markets and bear markets and everything. It takes a little bit longer than people think, to find your bearings and what you feel comfortable with. And then, so during that process, if you are newer to the game, always trade smallest size only. When you're first starting off trading, the point is not to make money. The point is to not lose money. Okay. You just don't want to lose money. And in the meanwhile, we're trying to find a consistent approach to the market that ultimately can be scalable. So that's my advice to newer traders. Put aside the pressure of the profits and the P&L, and just like you would be going to medical school, you don't want to pay too steep of a tuition, but there's a learning curve there. And so just one day at a time. Don't get anxious, eliminate all the distractions, don't get frazzled, and try and take an idea that you come across and make it your own. That's what I would say. Do your own research, and there's all the time in the world. You just have to have capital preservation in the meantime.
And Anthony, what are some of the common mistakes that you see new traders make, and how can they avoid them?
Well, I second everything that Linda said. I was going to talk about pretty much the exact same things. And I think the mistake that I see most traders, young traders, new traders make that I get DMs about, or, I even go on calls with traders to see if I could talk to them and help them out a little bit, is their expectations are too high. I mean, they're just expecting too much. They're putting too much pressure on themselves, setting too high of expectations in too short a period of time. And, time is something that Linda spoke about. We talked about it through today's conversation. If you feel like you have to do something, if you feel that you need to do something, you're not going to do anything really good. It's something that everybody talks about, but it's extremely important. If you focus on the process
somewhere else,
and you
man.
give
We want to
yourself
make
time,
some damn money.
your results will come.
Yeah, whatever. Stop being a little bitch about it. Put that money to work. Hang on. Strap your seatbelt up tight. Strap up your boots. It's time to get to work. You guys are going to have to give me a second to get the news. Unless we can go to StockTwits or something. My laptop literally just died. I'm typing and stuff. Come on. Come on. To forgive 7.7 billion in student debt for more than 160 borrowers to relief. Gotta wait for it to charge up, guys. Sorry. Hold on 1 second. Yeah, you guys will have to give me a little bit. Let's see if anybody, even if you guys comment, I can't really see. I can't see the comments unless I bring it up. What's up, Matt? How you doing, buddy? I'm good. Just kind of waiting for NVIDIA earnings, which I will have, guys. We will have these earnings live here. I'm going to make that here in just a minute. I'm not sure if it was Apple. Yeah, look at Apple. Apple's pulling back now. I wonder if it had to do with Apple. JP Morgan did not hold 200, like we said. What the heck was it? So the Qs did it. Did the Dow? The Dow also went down. Shit. Microsoft? Could the news come from Microsoft? But I am good. I am good. The analysis was spot on today, man. I literally, look, 80 bucks. Those contracts got to be damn near over, like, 150%. Starbucks, Moderna, XOM, Amazon, Tesla. Well, it's not really Tesla, but yeah, 72, guys. They're almost up 200%. No, they are. They were 20 cents. 2467. Let's see, 4, 6. So they're up a little over 200%. You're up about 150% right now on Starbucks 80 calls. You're up 250%. Yeah, they're 70 cents to 69 cents ish. 240%, whatever. Great job if you traded that. We point. This is why I always say, you know, let's look for the relative strength and relative weakness, and let's get behind it and let it. You know, that's a free stake. That's free money. That's why I stress on it all the time. Double, triple the volume, and those candles. You know, just the chart, it kind of shows it to us. But again, I'm just watching this rally, and if anybody wants to watch it with me, I can play it on here. I don't want to bother you guys with it. You guys let me know, and I will toss it up, and we can watch it together. I can put it on picture-in-picture down at the bottom right. This was a rally. I kind of want to see, you know, it was just this past weekend, so I am just watching some video footage of that. Alright, let's get back to it. So again, yeah, comment below if you guys do want to watch it with me, if you guys want to listen to that Twitter space, whatever y'all want to do. I just need a couple minutes, that's all.
You know, you need to recognize that your stop should be a little bit wider in an extreme noise type of market. And there may be a case where if it's an efficient market, you just need to get the trade on, which may just mean enter buy market or buy at the end of the first hour or buy on the open or buy on the close. You need to get that trade on.
And A, over to you.
Hearing Linda talk about how the markets could, you know, get one-dimensional or, you know, one-way trains, goes back to why I focus when the macro and the technicals are together and the equity rallies can go further than you think.
Sure,
This
Matt.
is why
Sorry, I was
I
starting up
adjust
my
position
computer.
sizing on being more long versus why I don't even really look at shorts.
Good idea, man. Good idea. Let's go look at Shopify. Good old shop. Shop. Drop. Start with a daily. Let's start with the daily. Oh. Watch this level here. If you get a pop back into that, if you pop back into 59, 10-ish, like a 10-cent area, and that low right there, Yeah, it's like 59 to 59.20. You could look for a little rejection and then look for this thing to pull back a little bit. Man, this thing just got slaughtered off of earnings. Like, it has not recovered at all. You got a little support down here at low a day. Maybe you could look to be a buyer at 58.50. Look at all that volume today, and it did not do anything. That's so weird. Yeah, look at that volume. What? Matt, this thing's crazy, bro. It didn't even move today. That sucks. So that would have... That was a little slickster there. Oh, I see why. The indecision there. Look, you got a ton of volume. Like, comparable to, like, the past few weeks. This volume today was, what, 2 to 3 times the amount that it has had in the past. And it still did not give you that continuation. That's not good. That's a sign of weakness. That's not a good look. So yeah, watch this level here at like, oh, it broke back above. Watch pre-market highs. Watch 59. That's what I would do. I would watch 59. Goldman upgraded it. Maybe they're giving it a little bit. I don't know, man. That's so weird. So, yeah, Goldman Sachs, Gabriela Borges upgraded the stock from a neutral to a buy. We'll have to remember her. She must do this kind of stuff. Let's see here. 67 to 74. What I would say is let's keep an eye on this for the next couple of days. Right? People forget about it, and one of these days, like I mentioned earlier this morning, was like, you know, if people like, oh, Tesla's running or whatever, and like NVIDIA earnings are coming out, keep an eye on this tomorrow, Friday, and the beginning of next week. And if we can start, if we can start closing above 59.50, making 59.50 support, then we could get a nice little runner here. It would have been really nice to hold 59. Would have been really nice to hold that level, but I'm not sure what. It's so weak. It's so weak. Like, for it to pull back off of an upgrade from a decent analyst, like from Goldman Sachs, that's well respected. Maybe nobody really knows about it. So 59 is where, or 58.50. That's the final level that I would look for. 58.50. All right, see what happens there. You get a low volume pullback depending on what time frame you're looking at, and see if you can get some buyers to step in at 58.50. Oh, keep that out. Keep an eye out for that. Yeah, man, anytime. I'll try and write it down and keep an eye on it, but I would like to know. I just think those are the best times where it gives us the best setups, or like best opportunities for follow through when nobody's talking about it. Like even right now, which is surprising, it got a really nice upgrade and it failed. You know, with a ton of volume. Like, this isn't retail traders. I don't know many retail traders that are even talking about this after Tesla just did what it did yesterday, right? You have NVIDIA earnings and Tesla running like it did. No, I didn't even hear about this thing this morning, so I would look for that consolidation, and we'll look for, what did we say, 58 bucks? Something like that. This thing's really weak, though. You turn this into resistance, and yeah, look for 58. That's what I'd look for. So, And the overall market's also up too. Let's see how it reacts today. If it continues to be weak after NVIDIA's earnings, let's just say they raise guidance, everything's good, and the just market, we just close and make new highs. See how shop reacts, because if the rest of the market continues to make highs and shop just sits down there, I mean, you have Starbucks making new highs, ripping and roaring, which we bought. I could have swore you bought it with me, Matt, or we talked about it. It might not have been you. It might have been you. It might not have been. I can't remember. But look, man, this was a good buy, right? Even if you bought some leaps, this is a good buy. There's a lot of cash there, so it's like it's 1 quarter. It's not the death of Starbucks, but this is a big resistance level. This thing, I'm sure, will calm down. You just had a really good company go down, get cut almost a quarter of their market cap, 15-20% of their market cap, and then you're seeing there's institutional buyers there, which is paying. I didn't trade this today because I accidentally traded Tesla, and but I'm gonna finish watching this. Give me like 10 minutes, and I'll be back on. If you guys want to watch this rally that I'm watching, you guys just let me know, and I'll put it on. Or for now, I'm gonna play CNBC.
Jimmy, year over year expected to be up 410%. Revenue expected to be up 241%. Just gives you an idea of why the stock is where it is.
It certainly does. I mean, it's pretty incredible, and I think I mentioned this to you yesterday, Scott, but the earnings estimates for this quarter are 230% higher than they were 1 year ago. They're 20% higher than at the beginning of the year. Now, I think they will beat the earnings estimates. I think they will raise guidance. And my comment, rhetorically asked, is, does anyone disagree with that? I mean, in the world, I'm struggling to find a single person who's saying, no, they're going to miss. Joe, I heard your comments wonderfully made about what hedge funds have done and what put sellers have done. And I think, or put buyers rather, I think what they're saying is probably what I'm saying, which is that everybody expects a beat and a raise. I mean, this would have to be one heck of a quarter to beat lofty expectations. And I think there are some people, me included, who are saying it's probably all priced in. Now, I'm a holder of the shares, have about a 2% position. I expect that in the fullness of time through the end of this year, I'll probably double that. But I'm not buying it here today. That's my comment.
All right.
It's interesting because when people say it's already priced in, it's not already priced in.
Okay.
And the overwhelming majority of people, logically, when you look at NVIDIA, you say to yourself, yeah, it's priced in already. But I don't know, this company, you cannot bet against it from the perspective of holding a position.
I'm not betting against it. I do hold a position. I hear you. You're absolutely right that has been the history for several quarters.
You think
You'll
if
agree
they,
at some point that won't be the case.
You think if they,
that's fair.
You think if they hit the ball out of the park from a guidance standpoint that it's already priced in?
I don't think that's controversial. Yes, that is what I'm saying. I don't think it's controversial. It might be wrong. I mean, I'm not sitting here saying, by no means am I saying sell the stock, for goodness sakes. No, if it goes down, I'll buy more.
No, I don't understand why you guys keep going with the sell the stock thing. No one's suggesting if they miss, you're going to sell the stock. Right. But that doesn't mean the stock is not going to go down. Why does it have to be like either they beat, oh, you stay in the stock, they miss, you sell the stock? No one's suggesting that.
Okay, if we get a bounce, I might trade the overall indexes today.
I may have been misreading what you were saying.
We're pretty much right around where we opened up at today.
My point is, I'm underweight this stock to where I want to be, to where I think I will be. I'm not buying it right here at $947 a share. That implies that I think I will get a lower price at which to buy it. I'm not talking about selling it. I mean, that's not in the cards. But what I am saying, and again, could very well be wrong, is that the expectations for this stock are incredibly lofty.
Well, which is why we asked Christina Partsenevelos to come here to Post 9 to tell us if they can live up to the hype. I mean, you know the story. You tell us about it all the time. Expectations keep going higher. CEO's a rock star, right?
Yeah.
Everybody seems to.
Leather, various leather jackets
everybody
over $2,000.
seems to think, right? It's like that commercial, like, you're not a rock star. This guy's a rock star. right? Don't act like a
well,
rock
he
star.
at the GTC event not too long ago, he talked
Yeah.
about filling out the entire stadium, and he did. And there were celebrities, a video, Ashton Kutcher walking out, all of these celebs going to see him.
I had Google
but,
up because
I
there
have
was
points for all of you guys. So CapEx spend, we care about that as a driver
Keep an eye
because
on Amazon
50% of data
as
center
well.
revenue last quarter came from cloud hyperscalers. So that's why we always mention this number. We didn't talk about it, but Tesla is known to become a bigger customer this past quarter, so that should help drive it. AMD.
If you guys are having
released their
trouble
earnings first.
hearing
They
it,
did
just let me
raise
know.
their
I'll turn it
AI
up or
revenue
down.
guidance
You guys
to
just
$4
let me
billion.
know.
So that is a good barometer for NVIDIA, further strength going into that. And then this one's not mentioned too often, but there's a high correlation between Taiwanese chip exports and NVIDIA sales, right? And so exports, recent report showed really some strong strength. And so that's, another reason to your question, Scott, why we see a driver. Now I want to just highlight some risks because you guys, you talked about demand being priced in. So, and I know you challenged that. I think estimates have come up quite a bit leading into this. Maybe not necessarily your guidance question, but that does mean, and if you're saying it's not priced in, you're not believing the hype about the hype theory, right?
Well, the other times over the last 18 months, if you thought all of this AI good news was priced in, other than a couple periods of pullback, I mean, you've kind of been wrong, right?
Last summer was a pullback, though. To Jason, you said a blowout quarter, and then there was quite a pullback, and it had an outsized negative effect on the markets in the summer of last year.
Well, that's why we suggest that it holds so much importance tonight.
Oh yeah, well we know that. Just you mentioned all the stats and the impact on the growth rate on the S&P 500, given the market cap and the growth. I think the key thing for NVIDIA and why everyone watching should really care, and not because you necessarily own it or it's in a fund that you have, but because the earnings potential for NVIDIA, it's climbed dramatically compared to other names. And so that weighs a lot when you factor in this company and its impact on markets. But you talked about April. Didn't the Fed, comments about the Fed, and you saw tech all across the board, possibly no cuts and that whole debate. And so that played a role in NVIDIA shares as well.
But that's healthy. So you had the 10% positioning correction already. And I think that's a point of emphasis as you look forward, where the positioning is not as speculatively long as we thought. But I guess the question for tonight really comes down to, is the AI trend and the thesis surrounding AI still, levitating, still supported? Because I look at the recovery that we've had in this month, and it's all about corporate earnings, and it's corporate earnings growth from these technology companies. So I guess more than anything else, maybe what NVIDIA does tonight is it just validates what we're witnessing in corporate earnings more than
Let's see if we can't get a spot and test this high. I mean, the Q's busted through that level
have
there.
A big play on, look, from
Give
the
it a
April
couple
bottom,
minutes.
tech has been the best performing sector.
It's 12 o'clock.
Okay?
It's lunchtime.
It, in some
Dude,
respects,
it's so
is going to
weird. There's like
validate
volatility
that move,
leading into these
and whether you
earnings.
think that this market,
It's actually pretty wild.
NASDAQ has been hitting a new all-time high several times.
The action today is actually
week.
pretty crazy.
It's decide whether you get that next leg
Do we
higher
have a Fed
potentially,
member
and if you get it
speaking? Hold
soon. Not whether it's going to happen at all, but whether you get it soon, don't you think?
Or a bond I think that's exactly right, whether you get it soon. I do think there will be another leg higher in this market, and I've been consistent in saying I think non-technology will do better than tech. But I think in the short run, if NVIDIA goes down tomorrow for whatever reason, not that they're going to miss, I don't think anybody thinks that, but maybe the expectations are too high. If it goes down, it's hard for me, and I'm not saying that small caps will rally in the face of NVIDIA going down. I don't think that's a reasonable thing to assume. I do think, however, to your question, Scott, about whether the rally happens sooner or not, once you get downstream of tonight and tomorrow, get into next week, the market's not going to be thinking about NVIDIA's earnings anymore. It's going to be thinking about what comes next. And that's where I think you will see and can see some differentiation in stock price returns besides just technology.
You still, Jason, have a tremendous amount of concentration in a reasonably small number of names. Right? They're the hedge fund monitor from Goldman Sachs. They're the most popular. All the mega caps are all on the list. That's not going to be a surprise to anybody. The problem with that is, as UBS today talks about, is that can make or break your returns. If you're too concentrated in these names or not enough, Joe T.
Dude, I completely forgot about
because you've had
FOMC
concentration,
minutes.
the
Like, I don't
likes
even
of which
care about
that has not been
FOMC
seen
minutes.
for at least 2 decades.
Okay, cool.
Yeah,
So we got something to look
and
forward
that's
to.
100%
Sweet.
right. And I think back to the first quarter where tech was the 8th best performing sector in the market, and energy was number 1. And you see how quickly that story reversed. And when we're hearing about the enterprise spend that Christina spoke about, all the enterprise spend from the hyperscalers in terms of AI spending. So I think, there's absolutely some concern with how far they've run and how quickly they've run, but we have this conversation often. And I do, to Jimmy's point, I do think that the economy is strong, so I think the cyclicals can absolutely work. And I think once to Jimmy's credit, I think once this NVIDIA story is over, the print is done, and then we can start to focus on other areas in the market, and I think that's where the attention will be.
Did you tell us what the whisper numbers are of
It's
how high the bar?
$25.5 billion for a data center, so for total revenue. So that's it was 24.6 what the street is anticipating, but 25.5, so very close to $26 billion. One last thing though, retail traders, we can't discount the flow of retail traders in this name. So maybe to Jim's point about negative momentum downwards, that could be driven by the retail traders, given, almost 50% of the flow is from them. So I think that could be maybe a little one.
All right. I'll see you on Closing Bell. Yeah. I look forward to that. Christina Partsinevelos covering NVIDIA, of course. Other streaks we need to talk about today, Apple and Alphabet, 7 straight days of gains. Today would be 8. So we're going to watch those stocks closely over the last few hours of trade here. And by the way, Apple is back towards 2 flat on the year. It's up 16% over the last month. What do we think about Apple as, again, the misfortune, I guess, of having to rebalance when you did, play by the rules that you do, and watch this stock sort of take off.
So here we are at the 14-minute mark of the show, and the biggest concern that I have right now about the market and about positioning is I feel as though what's happening in the month of May is that we're reestablishing, as that note suggested, we're reestablishing that narrow concentration, that narrow performance concentration from the Mag 7. Month to date, Apple's up 13%, Microsoft's up 10%, NVIDIA, Meta up 9%. It doesn't mean other areas of the market aren't working, because they are. It's different than the field where you actually had other areas of the market that were actually negative. It's not that they're negative, but we're seeing recently that these companies are leading performance higher. And the concern I have this evening is that if NVIDIA delivers the type of performance that takes the stock higher at a 5% weighting of the S&P, I think that's only going to intensify this budding dynamic, this return to 2023, where you had a very narrow set of stocks leading performance higher. And in that environment, look, the reality is clear. Adam Parker and I talked about this on Closing Bell months ago, and he's 100% right. It is nearly impossible to outperform the S&P if you have a narrow set of companies where the dominant performance is going to come from. Yeah. And I'm concerned that we're back in that place. And to your point, Apple got it started. Apple got it started with the buyback.
They did. NVIDIA rallying back to 950 was a nice exclamation point. Amazon has been around a new high. It's up 21% year to date. They're holding their shareholders meeting. They started about 15 minutes ago. Our Kate Rooney joins us now. I mean, some of the secrets are out, I guess, based on your reporting of this overhaul to Alexa. But what else should we look forward to as we watch this stock do quite well of late?
Yeah, Scott. So some updates we've got on what they're doing with Alexa, but Amazon is just starting to introduce those shareholder proposals in its annual meeting, which is going on right now. The stock nearing an all-time high again. Artificial intelligence has really been a big part of the bull case, especially within AWS, Amazon Web Services, which did just get a new CEO, one person who's worked closely with Matt Garman. The new CEO described him as a wartime CEO and really a technical leader. He is tasked with getting ahead in this really competitive AI landscape. And one area, Scott, as you mentioned, that Amazon is now really looking to beef up its AI offering is with Alexa. Sources telling me that Amazon will give its voice assistant a major AI overhaul this year. It's going to add a monthly subscription to offset some of the costs there. This could position Alexa to compete with new Gen AI-powered chatbots, what we've seen from OpenAI and Google, for example. And sources tell me it's not going to be part of Amazon's Prime subscription. The price, though, has not been decided yet, Scott.
All right. SK Rooney, you bring us up to date on the developments from that meeting. Jason Snipe, talk to me about Amazon. I said it's up 21% year to date.
Yeah, so what I like about Amazon, you know, and what's played out for me this year is operating income has grown substantially. I mean, up 40% year over year. AWS has reaccelerated. It's up 17% in the last quarter. So Jassy has done a real great job with the retail business as well. I just think that going forward, and then when I think about the grocery business and all the other business that they're involved in, you know, I think about them taking the lead in that space as well. So I really like this name. I continue to like it, and I think out of the mega cap spectrum, it's my favorite play.
Jimmy, you're reasonably new into the name, right? You initiated in February, a few months ago. You'd like to add more. You think you're going to get the chance?
I'll be okay if I add from higher as we go along. I did add some last month in April. You know, one of the things that triggered me in buying it, Scott, was the recognition in February that it was on the precipice of breaking out. You know, it had been outperforming for years and years and years, but the share price had basically been flat for 3 years. So that was that imminent breakout that I was playing. I don't mind adding to it higher. I think that its earnings, when we look at its earnings multiple in the low 40s, I think if we all know if we turned off a lot of the R&D spend, the expansion spend that they're doing, that multiple would be more in the low 20s. So I don't think I have strayed from my value passion in buying this stock. And if it goes a little higher, it's still going to be at an attractive valuation for me.
I'm looking at other discretionary stories today, too. Wow. Our chart of the day, we need to talk about.
Yeah. Oh, shit. And Mom, my bad, buddy.
And it's getting hammered.
Yeah, cup and handle. Sorry about that. I was watching.
Right there. The stock's down 6%.
I was watching a video.
That's a new 52-week low. By the way, so they announced the departure of their chief product officer. This would be the 6th consecutive day of losses, 4 straight weeks of losses.
You are correct.
Let's
look at it.
Matt Boss on yesterday. He's
Love intraday handles or cups and handles. I don't really like this as a cup and handle.
He's overweight the stock.
I'll tell you why.
He's got a $500 price target, and he defended the name. I want you to listen.
Right here is my
on a multi-year basis. I think that Lulu can drive the double-digit top line growth,
of this hook.
which would equate to
I've
a
seen.
mid to high teens
I played
bottom
apples.
line grower.
Apple did
You have
it.
international.
All right, we should see it on a 3-minute, 2-minute, 1-minute, 5-minute.
To the international
I think
markets.
this here.
You have men's that can still double from here.
Right.
Accessories is still an opportunity.
Is too much.
And the TAM, the total addressable market for casual.
This is a perfect downside. It can still happen. Don't get me wrong.
Side of the pandemic.
This. Look.
Okay, that's Matt
So when you guys see cup and handles, like you want to see this, right? You see how this is nice, tight price action. The candles are tight.
Should you
and look at this side.
Seriously concerned?
I don't think if you own the stock, you should be.
You see how it just crumbles? It's just like it goes down, up, down, sideways, down, up, over, down, left, right, up, and then it just
from the perspective
goes
of
up.
has the stock
That's good.
up enough
That side's good.
relative to its
Watch the
growth
volume.
potential. I think the
It's got
answer
volume.
to that is you're getting close
I mean,
to a
it could
trough.
still happen. I don't
The
think this
concern
is
that
a
you
cup
might
and
have
handle in
buying
my
stock
book.
here is
I
that
think
you're
this is going to
sitting with a
start to
stock
break down,
that you're
possibly.
going to have to
See, some
bide
people
your
get
time
confused
with,
when they
that
just see
over
the
course
shape
the
of
coming
something.
quarters,
You
it's
have a
going
little
to have to
double,
prove that it is
triple,
not losing
quadruple
market
bottom
share.
here.
Over the coming
Chances are
quarters,
it's
it's
gonna
going to
break.
have to
That's
prove
one,
that you
two,
see the
here.
acceleration in revenue growth.
Let me,
So,
matter of fact, let me go right here so we
candidly,
can all
I don't
see
know
it.
that I would at $302 say, well, the stock's got another 15 to 20% to the downside, or 15 to 20% to the upside. I think it's right.
You'll know when you see it. You know what I'm saying? You're gonna know it. Like, this is ugly. Like, there's no. This is like there's no. How do I say it? Like, you know what I'm saying? Like, especially when it comes to a cup and handle, you want the price action to be tight. You don't want this. Like, you want this shape. Don't get me wrong. Like, you want the little like it comes into the front of the cup. And then it goes down, obviously, and then it curves. You know what I'm saying? And then you go up. And then you test like that part of the cup, and then what happens is that bounce. That is also tight price action. Like, this is tight, that's good. You want that on low volume. Like, you might get it. I just think in my book, I've seen them so many times. I would not consider this a cup. It's the formation of the cup is so just like the left side, the downside, the left side of this cup is just, it's just horrendous looking. That like, it's like, it looks like the cup has just been thrown on the ground and trashed and crumpled together, if you know what I'm saying, right? You know, so it's definitely there. It's got the shape of a cup and handle, but I wouldn't consider this one in my book, just because this is like a downtrend and you just bounce and then kind of just, you know, watch time and sales. Maybe you do start to get some bouncing here, but I don't think this is a cup and handle in my book. I don't think institutions, I should say, the trader at Goldman Sachs is going to say, yo, look at this cup and handle, right? Because I don't know. I just think, like, it goes down, up, over, down, up, over, down, over. I don't know what I'm doing here. But, oh, we're going to go up. Like, so, but that's a good eye, though. I do appreciate it. That is a really good eye. And they don't have to be super clean, but, like, if you read William O'Neill, and you'll notice that every time that they work and you can be comfortable with it is when that price action is clean. And you get that pullback, you get the curvature, and then it just, you know what I mean? And it's just, it's beautiful. And you're going to be like, wait, that's a cup and handle. Like, you'll see it. Inverse head and shoulders, same thing. Like, people try to make the ugliest looking pattern, say, oh, look, head and shoulders. Like no, just listen. When it's there, you're going to know it. You know what I'm saying? You'll know it. You'll be able to see it on the 2 minute, 1 minute, 3 minute, 5 minute, 15 minute. You'll be able to see it throughout. It's been a while. The last time I seen a bullish pattern, which because we haven't really been in a bull market or like a comfortable bull market, was the SPY like 2 summers ago. We had a beautiful inverse head and shoulders that it made all day long, and then you got the pullback, and then at like 3 o'clock you just got that neckline, and it was a beautiful pattern. Like whether you were using a 5 minute, 1 minute, like you could clearly see it, and it took throughout the day. The last time I played an intraday cup and handle was COVID 2020 with Apple. I wish I could pull that chart up because it was a beautiful setup. Like, let's see if this breaks down. Chances are this might break down. Like here you had an increase in volume on the downside of the handle. It might work. I don't know. I just think, you know. But yeah, good eye though. Good eye. Definitely good eye, bro. For sure. Like, I'm not taking anything away, you know. That's, people can see what, you know, they want to see, and it technically is, but I just wouldn't call it one in my book. Maybe, I don't know. So anyway, I didn't mean to spend all day on that, but good eye. Good eye, good eye, good eye. Let's see here. How you doing today, bro? How's everybody doing today, I should say, or ask. How's everyone doing today? Oh, that's why, Bitcoin. Yeah, look at that nice little double bottom there. Boom, boom, and then, yeah, look, see how it's going to break down? And you're getting an increase in volume on the downside. Really, that's because of the tail. That increase in volume is to the buy side, but let's see here. All right, so we have FOMC minutes. See, chances are it might break down. I'm still looking for an Amazon long. Or, like, I'm trying to see what Amazon does to take this trade. Because I think Amazon is setting up, like, there's something going on with Amazon where it hasn't really moved, where we could start to get a breakout day, which could come soon. Like, look at this, right? Here's what I would say. If you see this flat top resistance here, right here on Amazon, at, like, 183, 184, right there. Pretty much bull flagged. It tried to break down, and now it's regaining it. Let's see if it pops right there. See if it starts to pop. Because this could be looked at as like an ascending wedge, and this is just like a longer term pullback to this prior resistance level that was kind of broke on an increase in volume. But look, though, here's the thing. Look at this sell volume, man. This sell volume is serious on Amazon. So I don't know what she wants to do. We have this resistance level that we're above at 180. Amazon might need time. Or look at this. Now when you scan back and look at it, it looks like this resistance level at 185 that it tried to make support, it just made that resistance today. And that's why we were saying to take profits in front of 185, 186 today on the long off the bell. So we'll see. We'll see what happens. Things can change, right? You have NVIDIA earnings. You have FOMC minutes. You could have some random news that comes out. There was news on AWS, Amazon World Service, that they're going to spend, I think it was a lot of money. Yeah, that is true. On your side of the pond, everybody is sleeping right now. And probably if anybody's on the stream listening to me, I'm putting everybody to sleep. Yeah, exactly. It's not clean, right? That price action, you want it to be tight. Those candles close together, and you'll see the curve, right? The candles will get smaller, and the closing and opening price of those candles will be lined up. It'll just, you know. I don't even have to say it, you know. So, but with NVIDIA earnings, I completely forgot we have FOMC minutes. I think, like, in my opinion, just as a personal stance, I could give a crap less about it. Look, we are above $80 on Starbucks. This thing is going to hit 300%, guys. Starbucks, those $80 calls are going to be up 300%. Oh, my God. $1. They were 20 cents. They're up almost 400%. 400% when I called these out. The $80 calls you could have got for 20 cents when I called this out. $1. 4, 6, 8, 10. 400%. Wow. This is why we don't keep our eyes off of it when everybody's looking at the shiny object. You know, unless you're not trading the breakout of the shiny object, just keep an eye on those runners, man. Starbucks has been paying us. This thing has been a freaking, just a jackpot, guys. This has been an ATM. We've traded this 3 times now. I'll be damned if that thing is not up 400% now. So I called this out right here on this breakout higher. And they were like 21, 22 cents when we called this out. And they're up $1 now. 183, like for $6, so we'll regret this experience. Tomorrow is a holiday, so it's like 10:30 now. Football match, which will go with like 3. My whole night. Oh, okay. Oh, so it is a holiday where you're at. So liquidity might be a little lower in the markets tomorrow due to the holiday, or at least the futures market. And even this market, like, you know, in the morning session. Well, see, I don't know where. See, the Europe just closed. I'm pretty sure. Yeah, about an hour ago, hour or so ago. Look at Amazon breaking down. Amazon is breaking down. Fucking Starbucks is up 400%. Unbelievable. So this isn't the first time. If you guys are just joining us, if you could hit the like button, subscribe. We're trying to get to 1,000 subscribers. It would greatly help, and we would appreciate it. If you want to, if we help find you a nice trick, if we find you a nice trade, if we help you make money, and you like to give back to the stream, not me, but the stream, you can donate down below. The link is in the description. So these breakout days here, we were on these 2 days here, huge days, right? And then another bang, and I called this out here at $75. I said, guys, we spent 3-4 days at pulling back to that level. Let's see. Bang. And then again, right? We're consolidating above that level and that pre-market low, or that earnings low. Bang. Right? Just Starbucks has been a beast. a beast of a stock and nobody's talking about it, and I love it. And these are the ones that you want. Like, you're in the gap fill now. You have nothing stopping you. So when nobody's talking about it, keep your eye on them. Where's that? Where you're at? I'm sure, buddy. Yeah, I mean, I wouldn't know, you know. And the thing about this, the thing about Starbucks is that they are very liquid. Look at the spread, 96, 99 cents, and that's on a movement. Watch as the stock pulls back. These things will get within a penny or two. 15,000 to 28,000, 28,000 volume, like that's nice liquidity. You don't really have to worry about chasing big spreads like Tesla on the open. I'm sure a lot of people got jacked. And I tried to tell them, like, yo, you better watch, man. The market's going to just bust your ass. Strap up. Because what did we say in the pre-market? We said look to the left and look to the right of you, because the person to the left and or right of you may not be there, may not be here with us today in a few hours. They may not be here with us. We're going to war. Let's go. All right? Is it you? You might be the one that they're looking at that ain't here no more. And I think Tesla did it to a lot of people. It almost took me out, but the good thing was I had a bulletproof vest, and there was a little bit of wind, and I don't know. It just grazed in my ear, right? Like a Mike Tyson. All right? Kind of just, I got hit, but it was unscathed. All right? I'm still here. Still here. So, matter of fact, I was able to hit one back and bust his ear, right? Or gave him one in the cheek. All right? I didn't take him down. So, again, I took half that position off, small loss. The other half, small gain. It was like 15-cent gain, but whatever. It was actually an accident too. It was like running over a landmine. I almost ran over the freaking landmine and blew myself up. Figuratively speaking. I would never put myself in a position like that. I will always live to fight another day. I need to start being on these, man. I gotta stop doing this to myself. The thing is I was watching Tesla today, and that kind of took me to a side, so I don't know. I gotta fix it. I gotta figure out a way that I can look at a few names and put the positions on and let them work for me. Starbucks would have been a perfect example of that. This is a perfect example of seeing a nice consolidation, making the resistance support, and just a nice ascending wedge. Bang. Like, this could have been a nice swing trade that we put on yesterday. And we could have put a stop. My stop would have been a close below like 77.25. 77.25. Which would have been this pivot low here. Right? That was that pivot low and this double top high. You want it to be like right under that, because there's orders sitting there. Dude, don't even worry about it. You're fine. Yeah, it's all good, Em. Don't worry about it, bro. Listen, that stuff is to be earned, right? There's nothing that's to be given here. You know, it's just if anyone wants to give back to the stream, you know, because there's a few things that I would like to do with it. I am setting up a different payment system, so don't worry about it. But I appreciate it, man. Don't even worry about it. It's all good. Let's see here. And it goes both ways, by the way, guys. If anybody posts trades ideas in here and I take them, I will be paying it forward. So don't think this is a one-way street as well. If you guys come in here and they're like, hey, take a look at jabroni.com. Take a look at baba.com, right? And we got a big hitter. Guess what? We're going to send a little bit your way, all right? We paying the tax. I'm paying the tax. 82. We said Alibaba shorts up there at 85. Why do this to myself every time? So there's so many stocks that have nice setups that as I go throughout the day, I forget about them. Alibaba, $85. Look to take it down to 82, 82.50. This would have been a nice little trade. We might even still be able to get this thing on because now we're just testing low a day. What's it down? Oh, it's down 3%. There's not really... Here's the thing that I don't like. Here's why I'm not going to take that trade right now at low a day. Because the volume, in my opinion, is about... Let's see. Let me find out. Let's find out real quick. And there's a reason why. So look. You can see this massive volume back here. Where on 15-minute candles from like 11, 12 o'clock, doesn't really matter what time of day it is. I'll even go down here, right? That's 1.4, 1.3 million shares traded, right? The most we did today was 1.1 on a 15-minute chart. You see why I don't think... That right there gives me a reason to say, hey, chances are we don't get that extension lower unless there's some news. And we probably just hang out. Maybe we do, but you could end up putting in. I wouldn't be surprised if this is what happens to Baba, right? It starts to work for people, and then bang, it just ends right back up, like right around VWAP and pre-market lows. Because it's already gave you a bigger move than it probably should have on a low amount of volume. Exactly. It is so American. You're exactly right, bro. And guess what? He wants to hit him more. The guy in charge now wants to freaking penalize the greatest asset the United States has, and that's some of the best companies in the world. All right? But they make too much money. You got to penalize. We're so taxed to the gills, and he wants to try to raise them again. Because he wanted to stick his nose into some other business and make everybody else pay for it. Like a piece of shit dirtbag does. Nope. But he won't solve the problem. But he'll sure try to fund it. Fucking piece of shit. He's just as guilty as Russia is, in my opinion. Like, I think they have this, like, little... thing against each other. And they make everyone else around them pay for it. You know, better track record than Warren Buffett. There's only one explanation. Yeah. Well, here's the thing. What's so funny about that is, like I said there's... Investing, first off, is not trading. Trading is completely different than investing. You're going to there's bigger volatility. You're going to get bigger swings to the upside, to the downside if you let it. But you can control the downside. There's a difference between buying leaps on NVIDIA and Apple and some of the best companies in the world than buying the stock in and of itself. Think about if you would have bought leaps on Apple on the lows. Even just a little while ago. Right? This low here, Nancy bought there. Nice rip. Guess what? You were probably getting buyers down here. You're below the 200-day. It's Apple. It's not going nowhere. Buy, 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 buy. Bang, you're up. You bought leaps. For the most part. You know? So, that's the winning recipe. And people think it's so hard. Like, seriously. Like, we've been doing it with Starbucks. So, there's proof is in the pudding. 159 long. Oh, what's that? On, what stock is that? Which one are you talking about? All right, give me just 1 minute, guys. I'm gonna grab something to drink. I'm gonna grab some water really quickly, and then I'll be right back. It was good to hear from you, Anmal. But I'll be back in like 2 minutes. I just want to grab some water. Let's see if there's any spaces that we can go to before these Fed minutes come out. Wonder if I could start one. Copper. Uh-oh. Let's see. Where's spaces at? Where do we have? What do we have? Let's see. What do we have? Wrestling fans. Okay, nothing. I wish you could see like random like spaces without people you don't follow. Let's see, trending entertainment. Let's see. I want to find something we could watch. I mean, I could show you guys the rally, but oh wait, hold on, 1 o'clock. That's the FOMC minutes come out. God, I love Liz. That's just between us on the live stream. Is I secretly have a crush on Liz. She's the best. That's all I'm gonna say. What do we have here?
That assumption. This one,
yeah,
this example is a bullish one. But you got a nice wide range here, and you've got some assignment risk over the next 30 days going into June expiration also. So keep that in mind. So a good look at a biased trade, but taking advantage of that dispersion between the implied volatilities also. All right, let's take a quick break here, Cav. We're going to talk another name that reports earnings after the close. That's going to be Snowflake, the cloud data platform stock's down 18% so far this year. Has not participated in the rally. They got earnings after the close. Stick around.
We're going to have to do a coverage on those. We covered NVIDIA earnings. Dude, what a day, man. What a hell of a day today. Heck of a day. Elf Beauty. Yeah, Elf's a beast of a name. Alright, Schwab, you're going. Can't do it. Only if I'm, never mind. Never mind, I ain't gonna say it. I ain't even gonna say that. We'll keep this up. 15 minutes. Oh, these 720.
Hell yeah.
The 720 is so sick.
Hey, he needs a signal if he's gonna cut me off.
Alright, anyway, that's the rally that was by me. And I think, I mean, it's already over with. I think it just ended a couple days ago.
Got the lights.
So I was kind of just watching some of this stuff.
Hey, it's the airport. Oh, we're gonna get a plane coming. On my when they wrapped the car, they didn't take the tape off. And thanks for letting me in, buddy. Appreciate that. The airport, it's got its own landing. Hold on. Are we at Stradman's house? I think we just came to. Yes, the founder of. Nice to meet you. But dude, I can only. That one. You guys.
Alright, anyway. Alright, so we have that. Her beautiful smile. God, Liz is so sexy.
Of this new technology.
Alright, give me a second. I'll be right back. I'm grabbing a Red Bull. I'm grabbing a water. Amazon just rejected the low of day. So you can look for pre-market highs, pre-market lows, yesterday's close right here. You're getting a little bit of movement there on Amazon. It's just weak, man.
These companies that are spending the tens of billions to build out. What is also interesting now is the other sub-themes in the market. The reflation trade, maybe that's sort of running its course with copper having a downside reversal today. The fact the financials have been so strong. The fact that globally the markets have been good. It seems like we're not just make or break on the AI trade at this moment.
Yeah, all right, good stuff. I'll see you on closing bell. Take the viewers right up to the line there. All right. Straight ahead, Jim is doubling
this
down
is
on
the
one
weirdest
day,
price action I've seen, guys. Like, I'm being honest.
The new trade he's making. Plus,
I'm being honest. This is crazy. Next. Like, look at the IWM outperforming. Get ready to hold high a
Asian
day.
Americans in the workplace report a significantly higher frequency of receiving negative feedback
at nearly twice the rate of other ethnic groups. That's according to a study by the Boston Consulting Group, which also found only 19% of respondents believed they were getting a fair shot to reach upper management. For Asian American, Native, Hawaiian, Pacific Islander Heritage Month, I'm Deirdre Bosa.
I love you too, Deirdre. I love all these CNBC girls. I need to stop watching CNBC and stop being such a nut. Let's see here. Tesla's back down at 180. See if you get some buyers that step in on Tesla here and try to hold this thing up. That's your test, man. If you don't hold 180 to like 178, Tesla just is a piece of junk. Again, it went right to the 100-day moving average and rejected it. If you go look on the daily, that's been its entire life. Okay? Go to the 100-day. Dude, look at Starbucks. 81. You're going to be a 500% on this thing, guys. Dude, this thing is just bugging right now. $1. You're up $1 now. Wait. Because it was 20 cents. It was like 20 to 22 cents for those calls. 4, 6, 8, 10. 400%. Yeah, 400%. You have 400%. You're in the money. You're in the money. You're in the money. From 20 cents, guys. Even if you market ordered in, you'd have got it at 22 cents. And that was a call out up here at high a day. Clap it up. Clap it up. Give a round of applause to relative strength and relative weakness. Wow. It didn't even try to hold it. Tesla's doing everybody dirty. So many people got hurt on this. You could tell right off the bell it was weak. Like that, it's just, you don't know what happened yesterday, but it wasn't meant to be. That's so funny. That's hilarious. That's so hilarious. Oh man, I feel so bad for people. If they never got their money back yesterday, you got some people probably throwing up that just blew themselves up today. Or just like lost way too much money because they either didn't stop out or waited to see if they would get like shaken out. That's why, listen, I accidentally went long. I had the long orders up. I accidentally, I had the orders up and ready, and I accidentally hit it, and I got in. So it gave me a pop. I sold, small loss, half of it, pulled back a little bit, and I said, okay, here we go. Like, this is it. This green box is it. And then we got that pop going right up in it. And this is why I said pre-market. I specifically said, if you go long at 182.50, take profits in front of 184. I'm telling you. Take profits in front of 184. That's why I drew this line there.
All right, we're back. We've been highlighting
because we were going to go
stocks
long
from the committee that have been on long winning streaks
into
or losing streaks.
and off of
182,
182.50
6 days in a row.
into that area,
Jimmy,
take profits,
you.
and then either reject, consolidate, or be able to break above, fill the gap.
I mean, I know it has some following,
you know.
but they're building the data centers,
volume's
and providing the
increasing,
cloud
though.
services that AI
Dude, I
needs.
should have just went short.
And if you're looking to play the AI trade and you feel for whatever reason you can't buy NVIDIA or something like Microsoft is too expensive, here's your name. This is just easy to buy here.
Okay. Cisco's on a 4-day losing streak. That's also you, and you actually used that 4-day dip to buy more today.
Yeah, it's up today, and here's what happened. Last week they reported earnings. Actually, it was a good quarter, good guidance.
$3.
Stock went down,
It's really
and there's a reason why.
it.
It has given disappointing guidance for 5 quarters
really
in a row
$4,
before that.
4 or 5.
Now, when that happens, you're in the penalty box. It's not a 2-minute minor. It's a 5-minute major. You don't get out until at least 2 quarters in a row of better than expected earnings and guidance. Now, Chuck Robbins is a well-seasoned CEO.
Again, if anybody has questions, you guys just let me know.
listened to the conference
If
call,
there's
I
anything
thought,
I can help you
they're
guys
on track.
with,
It's going
hit
to
the like
take
button,
until the next
subscribe.
quarter for them to really surge. But I think this turnaround right
all
here
that fun
is a
stuff.
tactical play where it's enough selling. People are
Be
looking and
careful
thinking
out there.
about
We
the
have
quarter and
FOMC
saying,
minutes.
yeah,
We'll
maybe
cover
this
in
is
just
the
a
right
minute.
entry point
Let
here.
me grab
So
some
this
water
might
and
be a little
something to drink, and I'll be
tactical
right
ad. I
back.
might take it off in a few days or in a couple of weeks, but in the long run, I do like.
And
the
if you
setup
guys
for
have
Cisco
tickers
here.
you guys want to go over and go through some charts, let me know, and we'll if you post them in the chat, spam the chat with tickers, random tickers, tickers you ain't never heard of. If you just spam the chat for me, that'd be awesome.
Rosenblatt, there was a double downgrade.
So yeah, give me like 5 minutes. I'll be right back.
And that was in regards to NVIDIA's new InfiniBand product and how they might affect the market share for Arista's network and the network solutions business. But I think they continue to regain steam. It's pulled back a little bit over the last few days, but I think that's even in anticipation of NVIDIA's report.
All right, we'll take a break. We'll come back. We'll highlight 2 big winners and 2 big losers in today's session. All right, some winners and losers. Joe, Analog Devices on the winners list. They beat. You sold it in the rebalance a few weeks ago.
Yes, we did. I do have regrets surrounding this stock. The stock was basically nowhere. The momentum had been neutralized on a 12, 6, and 3-month basis. What did they do today? They reported a very strong quarter. The stock is advancing nearly 9%.
Don't be so depressed, Joe.
I have deep regret on this one. I like the company.
Is it that obvious?
Well,
don't be so depressed. It's okay.
You're punishing me today.
I mean, you punish yourself. AutoZone, they missed earnings estimates yesterday. Jason Snipe, real quick.
Yeah, they missed on earnings, obviously, but I think for me, I think the catalyst for AZO is their international business. I think Brazil and the commercial business as well, I think will follow through.
All right, we'll do finals next. Eastern on closing bell. We'll take you through the last hour of trade. Obviously, right up. Brown, Bryn Talkington, and Stacy.
Market call is presented by FactSet, financial data and analytics powered by Tomorrow and SoFi. Get your money right, all in one app.
I've already said I believe $1,000, but if you're concerned about NVIDIA,
yeah, you hear that guitar riff, you know what time it is. Yeah, you do. Go ahead, Tommy. I'm joined today by the apparently hair challenge.
Hairless. I don't know what it, but it's funny. This is why they don't like you to have your hair up on TV, because then it looks like you don't have any hair.
No, I think
it's there. It's in a clip. It's all back there, guys.
High
Don't worry.
pony. You should maybe done the high pony.
Yeah, that feels like it's not appropriate for business television.
Fair. You know what? That's fair. Are you on any shows today? Well, today's a big day.
I have Yahoo Finance later.
Really? Vraiment. Jacob and I, which is Jacob, that's what do they call it when you go behind the Amanda's already shit pissed off at me. But when you go behind like the fourth wall, the curtain or something. So Jacob, have you guys have gotten to know? I was singing a song about June is busting out all over, and I thought that was from The Music Man, but Jacob corrected me, said it was from Carousel, and he knew that because he was the stage manager of his high school production of Carousel. No,
I didn't know any of this.
Okay.
This all news
You're not
to
interested.
me.
It's all you know. It's well, let's since you're. By the way, it's Thursday today, but it's not. But it's Thursday for our audience because, as I like to say, if it's Thursdays, it's Butters, bitch. But today we're doing it on Wednesday because I think you and I are best suited to handle this. So we got a little John Butters coming your way. But let's throw the rundown up, Amanda. Amanda's breathing a collective sigh of relief. Low vol, and I will tell you, vol got settled below 12, I think, last week. I mean, volatility is not a thing, apparently, but low vol equals higher stocks, question mark there. We'll discuss. S&P 500 versus the dollar. Dollar is interesting. A lot of things going on. Of course, all eyes are on NVIDIA today. I mean, everybody seems to be talking about it. As a matter of fact, I went to go get a cake for my daughter, the little sister's birthday today, and the cat behind the counter said, "Thank you." The cat, he goes, "What do you think about NVIDIA tonight?" I'm like, "You shitting me?"
Stop.
And
what'd you say? What was your answer?
I said, "Look, I don't know." I said, I know the revenue growth is going to be there. I get it, but to me, it's going to come down to margins, and can they replicate those 77% margins they saw last quarter? And if we start to see a decline, will the market get a little skittish? And he said, "We'll see." I said, "You damn straight we will." And of course,
more importantly, what kind of cake?
It's got like it's a cookie, like cookies, an Oreo type based.
Yeah.
I think it's nice.
Okay.
But
like
it's more about the presentation. I don't think anybody really likes cake. I
love cake.
Do you?
Love it.
Okay.
Yes.
Well, that's good to know.
Frosted cake, layer cake. Yeah.
Mm-hmm. Are you what kind of icing? A little like vanilla icing or?
Usually vanilla on vanilla, but just recently I had chocolate on vanilla. Yeah. Well.
Oh no, she's not texting me about the show. Oh, good. Okay. So
all right, let's do it. Let's do it.
So you see, now we're going to come right out of the gates here and give you what I call them CQ. Some people call them Carl Keaton-Nia, but he likes to tweet. I don't know what it's called when he tweets other people's shit, but he's tweeting stuff out and he's pointing out that the VIX closes at, you're basically little red dots, end of the VIX streaks of a year or longer closing over 12. Well, here we go. We got it again. And what I think he's trying to point out, and maybe I'm wrong, but every time you got that point in the graph, the market has extended its gains. With the exception, obviously, of that one little downdraft we saw around COVID. With that said, I guess, is this the beginning of a continuance, or is this going to be more like, I don't know, like 19, 20, 21 period of time where you obviously saw the VIX have a significant move higher and obviously the market have a significant move lower. I will just say this before you sort of opine. It is shocking to me that with everything going on in the world, and there are a lot of things going on, the VIX doesn't seem to care, and maybe that's just a function of it's a different instrument now. Thoughts on that, Elizabeth?
Well, it's another one of those things that we keep saying it's going to eventually come home to roost, or it's been affected by these 0 days to expiration options. And at some point that's going to blow up. And it just hasn't. Like all of this stuff just hasn't blown up. And I like this chart because it shows you,
why would it
even if you're not paying attention to the VIX, but midway through a lot of these rallies, when momentum is intact, when momentum is in motion, it is really difficult to turn it around absent some big news, right? Obviously, we know what happened during COVID. That was big news. That easily turned momentum around. But if it takes something that big, I just don't see it coming on the horizon. Even something like NVIDIA earnings, I think there would be a hiccup. There would be, maybe a give back of enthusiasm and perhaps a little bit of right sizing of that enthusiasm, or at least the time horizon that it should be carried over. But going into NVIDIA's earnings right now, it's hard to feel like there's really all that much bad news around anywhere.
No,
And
that's fair.
There's so much enthusiasm and buying appetite, and everybody's turned bullish, that I don't even think NVIDIA earnings could send this market down in a decided fashion.
It's interesting. I mean, I'll push back a little, although I know what you're saying. I mean, I thought Apple obviously was sort of a leading indicator for the market for a long time, and that proved to be true for a long time until obviously the last, 7 or 8 months or so when, listen, Apple was under considerable pressure. The market didn't seem to care. So that whole edict of how Apple goes, the market goes, didn't really hold any water. Now maybe the throne or the torch has been passed to NVIDIA. We'll see. But, the level of importance, I'm reading some tweets. The first quarter, if you think about it, their EPS growth, I think, and I have to fact check this, it's north of 35% of basically the importance of the overall market's earnings. I mean, that is a staggering number if you think about it. So the importance of the stock cannot be underestimated. Now, with that said, it's not about, I know this is going to sound crazy, it's not about earning, and we're doing NVIDIA now, we shouldn't, I'll wait, but quickly, it's not about, to me, the earnings, it's more about the margins, but we'll get to it. Let's look at our VIX chart, because we're not trying to chart the VIX here. I mean, that's not what we're doing. We're not saying to trade the VIX, but what I'll say is, if you look at this is the levels that we obviously got down to late last year, earlier this year. And this is, for whatever reason, 11.5, 12 has proven to be a bottom for a period of time. Now, will we see it? Can it trade sideways for the foreseeable future? Yeah, I guess. But, as we get into, listen, the summer tends to be somewhat quiet, although with the election on the horizon, I think the summer is going to be more interesting than people think. There's still the geopolitical stuff out there. And, oh, by the way, I mean, you talk about this because you're very bright and you watch this shit, but 10-year yields in Japan have magically gotten above 1% for the first time, I want to say, in 14 or so years. So there's some things happening there as well that I don't think our market is taking into consideration. So I look at this VIX here and say, this should be a bottom.
Well, and what's interesting about this chart is that it looks like it's a trailing 1 year. The highest that the VIX got in this entire period was what, 23? So just barely above 20. 20 is usually a mental threshold because we've been below it for so long. You get to 20 and everybody says, oh my gosh, the VIX is high. It's gone up however much percent in a very short period of time. But even a VIX at 20 isn't that high. No. Usually you see a VIX spike to somewhere in the 40s or above 40, or it gets gotten to 80 before at times of real stress. So this is just a good example of how unstressful the market environment has been, and the fact that here we are in 2024, it's starting summer.
I'm going to show you
and the worst drawdown we've had in the market was what, 5%?
Yep,
which
that's it.
Is a third of the average annual drawdown that you get in any given year, good or bad. So this is an environment that I think investors are happy in. It's been a friendly environment for a lot of stock investors. It's been a friendly environment for risk assets. And there's no telling when that will turn around. But the longer we push out this cycle, the longer we push out the rate cutting cycle, the more opportunity there is for this to continue.
Yeah, listen, makes perfect sense. I'll say this as well. I mean, these spikes in the VIX last maybe 2 days, maybe at most, and then it gets it gets ratcheted right back down. And I think in large part is my sense, the markets become sort of desensitized and like, shit, if I can take advantage of a spike in the VIX by selling whatever options or selling volatility and earning that synthetic dividend, I'm going to do it because I know it's not going to last. And I know the market doesn't stay down for a protracted period of time. And I'm going to take advantage of this instead of being scared by it. Anyway, that's that. Let's go to if you're not following, by the way, if you're not following Elizabeth on Twitter, you should, because, you throw out some serious shit on the Twitter. And I love this. I mean, you did a little D, a 40D correlation. But I mean, this is like, you got to walk me through this because,
So
man, oh,
this
man,
is Mario's
eyebrow stuff. I was going
masterwork.
to say, this has got to be my man Mario.
This is Mario's masterwork. I loved this one. So we tweeted this pre-market today, talking about correlations, the 40-day thing, just not necessarily just an arbitrary number, but a long enough period of time where that equates to about 2 months of trading days. So when you look at this chart, we're looking at the correlation between the market cap weighted S&P and the equal weighted S&P. Okay. So we know that the market cap weighted S&P is driven by those big names. I don't even remember. I don't know what the percentage is now that those top 5 names make up of the market cap weighted S&P, but that's why we have those conversations about, can the market go up without Apple? Can the market go up without NVIDIA? The correlation here is low and has stayed low for some time now. The connection that we're making is that when you look over history, the other times that the correlation has been low like this, meaning the other times when the market cap index has been driven so much by just a handful of names, are some periods that I think we would prefer to not repeat, right?
100%.
We've got the late 90s, early 2000s, and there have been a lot of comparisons made to that time. Some of them make sense. Some of them, it's not a great comparison. It's apples and oranges. But the reality is that we are, again, in a market environment where we are dependent and driven by just a handful of top-heavy names. Now, we all know that. That's not news to anybody. But this is a measurement, and when you look at it over history, it does at least raise your antenna for, are we at risk of, one of those sort of big tree fall hard kind of scenarios where we've gotten too dependent on the winners, and we should make sure that we're spreading the love. Oh no!
No, because
can you recover from that?
No, I can recover because what you say. So I think I have a love affair with a couple people. I love Vince Vaughn. I think he's well, I shouldn't curse, but I think he's a genius. I held myself back. I love him, and I also love Bradley Cooper for a myriad of different reasons, not least of which he went to and graduated from Georgetown University, as you may or may not know.
I didn't know that.
Okay. Oh, yeah, I'm just saying. Yeah. He started at Villanova,
Coops.
Then he came to his senses, and he went to Georgetown. But that whole line you just said, I mean, that's the line he says in Wedding Crashers when they're playing football, and he blows up Vince Vaughn, and he says, "Big tree, fall hard." And I laughed my nuts off when he said it the same way I just did when you said it, which is fantastic. So thank you for that. I mean, that was fun for me. No.
Good.
Now, look, but I mean, I'm not pushing back, but there's this whole argument, and let's throw that up one more time just to take a look at it. Wait a second, Elizabeth. The market is broadening out, and maybe, but this would suggest otherwise. I mean, as a matter of fact, this is the exact opposite of that.
Yeah, it is the opposite of that. And yes, the market has broadened, meaning that other sectors and smaller cap stocks have participated more so than they did before, but they haven't gotten to the point where they've durably participated and stayed that way. You still see small caps lagging. We still see a decent amount of sector rotation under the surface. It hasn't persisted long enough to make this correlation go up again and have entirely broad market participation. So it's still driven by those big cap names. And here's the other thing. This is a metric that it doesn't necessarily need to be good or bad, but what it says to me is that it's confirming what I have long suspected, and what I still think is that we are just in an elongated late cycle. Large caps do better in late cycle. I don't care if it's technology. I don't care if it's energy. Large cap stocks typically do better in late cycle behavior, and that continues to be the case. Now, people can explain that away and say, well, it's because they're the companies that are the healthiest. It's because they're innovating more. It's not just because they're large cap. I don't think that's the case. I think it's because they're large cap stocks. It's because investors have an appetite for that right now. And because we know that at some point a cutting cycle will begin, which basically by definition is late cycle. That's when you start to cut rates. So I think that this makes a decent amount of sense. It is something to keep an eye on. And it, as much as I want to be able to say to people, buy small caps because they're attractively valued, I still just don't think this is the right environment.
It's interesting because, I think the world of you, and as fun, as edgy, abroad as you are, and I say that's like the highest compliment I can pay somebody. You're really effing bright too. And, you pay attention to stuff, and your next slide is going to talk about the dollar. But before we get to that, for as many people that are talking late cycle like you, correctly, I think, by the way, I mean, I've seen people paraded out there on the network early to mid cycle, and I'm saying to myself, what do you see that I don't see? And, they make a somewhat compelling argument, but it doesn't really, I mean, historically, let's put it this way. Through the lens of history, their argument doesn't make sense. And they'll say, maybe they'll wind up being correct. It's different this time and all those things, but it's not. And I think you're spot on in terms of it's just the duration has lasted a lot longer, definitely than I thought. I mean, I thought we'd be in a much different place by now. And by now, we're talking about to embark on the summer of 2024. But for whatever reason, we're not. And maybe I didn't take in consideration the amount of liquidity that was sloshing around the system, or maybe there were some other factors that I didn't take, again, into consideration. But man, oh man, this reeks of late cycle. And that graph that you just brought forth, you and Mario, I say Mario, you say Mario, I think speaks volumes. Anyhow.
Yeah, well, the other thing is, I think the arguments are made with different sets of data. I am always looking at things through an economic lens. And when you look at metrics like the unemployment rate, if we were early to mid-cycle, the unemployment rate would be higher and falling. It wouldn't be low and rising. We wouldn't be waiting for that to turn up. We wouldn't be asking for cooling off in the labor market in order to cool wage growth. We wouldn't be trying to cool inflation. We would be probably trying to ignite some inflation, especially if we were early cycle, because inflation would have fallen during a contraction. So there are some timing issues with the macro data that doesn't show that we are early or mid-cycle.
Which would leave us
the
some
market
nice
data, and especially when the market was broadening out and other sectors are starting to participate, small caps are participating, that does look more like early to mid-cycle. So the market is telling one story. The economic data is telling a different story. GDP growth even has started to cool, which again sends a signal more late cycle, not early to mid, when you would expect GDP growth to be ramping back up. So there are some contradictions in it, and I do respect people's views if they're looking at market data and saying, well, the way the market is behaving is that we are mid-cycle. That is true over certain periods of time. I look at it through a macro lens. The macro data tells me that we are pretty decidedly still late cycle. Not in a bad place, but pretty decidedly late.
Okay, a couple things. I don't know if we
how many viewers you got?
The 1 o'clock shows. Maybe we don't. I don't know. Maybe it's just market call and they don't get named, because I know our podcasts get named. So when you said cool the first time, I sort of let it go, but then you said it again, and of course, I know you were thinking of the same thing. The great band Boston. You remember Brad Delp, one of the great lead singers of all time. They had 3 albums, and their third album, aptly named, was Third Stage. But one of the songs on that album was Cool the Engine. So if we're not titling this, I think you and I should save Cool the Engines for one of our podcasts. So Amanda, Jacob, Timmy, Bill, and you, EY, please make a note of that in case I forget, because that's a badass name for a podcast. Cool the Engines.
Okay, noted. I mean, not Cool Your Jets, though.
No,
my mom always says "Cool Your Jets."
Yeah, I know. No, Cool the Engines. I mean, it's a great song. Unfortunately, we probably can't play it over this because I love it. It's great. I mean, Boston's one of the most underrated bands of all time. Anyhow, with that said, let's go to this net. Now, this I like as well. Dollar tends to spike during times of market weakness. Now, don't take my word for it. I mean, just take a look at this, and that speaks to exactly that. The red or the purple, I guess, is that purple or red? I guess it's
magenta.
Purple. Magenta. Dollar index, and the S&P 500, which only goes up, is sort of the blue, or maybe that's teal.
I think that's blue. Kind of a periwinkle, like a deep periwinkle.
It's you know what?
My dad would be proud of that. Yeah. Okay. So this chart is just to set the stage. We all know about this relationship. And when we talk about movement in the dollar, nobody will dispute this relationship where you've got moments of fear, things like the VIX spikes, stocks go down, the dollar rises. Why does that happen? Because typically fear permeates throughout the globe. You hear the phrase, when the US sneezes, the world catches a cold.
I've heard.
And then you've got all of this demand for safe haven assets, which typically is dollars or it's treasuries, and investors have to convert their currency into dollars in order to buy the treasuries. So you get demand for dollars in periods of stress. This is no surprise to anybody. So one of the things that Mario and I looked at this week, and even we started looking at this last week, was, okay, we all know that this is the case, but the reality is that we spend a lot of time outside of these three circles. So what happens during those periods? Because there are still periods of dollar strength or weakness in between these extreme scenarios. So there's a table that I believe we shared. If we can bring up the table about the dollar.
This I love, by the way.
So here's the other table. This one is about the yield curve. This one. Yes, perfect. So here's what we did. Anybody watching, you may or may not know about Fama French. They've got these factors that they talk about. Basically, it's saying, do small caps outperform large caps? And when does that happen? Does value outperform growth? And when does that happen? And then there's a profitability factor, which is just basically about operating margins and having healthy operating margins versus companies that do not have healthy operating margins. Okay, so we looked at this over all of the dollar strong and weak periods. And Mario has outlined in the footnote, if you really care for details about what that is, but maybe just trust us on this, when the dollar is strong or the dollar is weak. So here's the interesting thing, not what you would think I'm going to talk about based on this table. You would think I'm going to talk about the strong dollar environment where there are actually numbers in those cells. I'm not. I'm going to talk about the weak dollar environment where the numbers are 0, 0. Okay. Here's the thing that's the big takeaway. If the Fed is going to start cutting rates in the fall of this year, we would also expect that yields will come down slowly. We would expect that dollar strength may give some of it back, right? Not necessarily fall off a cliff, but slowly weaken as the Fed brings rates down. So if we enter a weak dollar period, what's interesting about this data that we figured out is that you shouldn't overcomplicate it. Don't try to do this factor trade and say, well, small caps are going to do better, large caps are going to do. No, just be broad-based, because in those environments, typically that is good for stocks broadly. So no need to overthink or make this more complicated. Now, the other thing that's interesting, or did you want to talk about the dollar more?
No. I do. Okay. I find now I'm going to wait for you because I have
you guys are paying attention
a comment
and really understanding what she's saying here.
Please.
Okay.
Like what she's getting across.
Just to continue this on, there are always cross currents. It's never this cut and dry. So you can never just say, all right, if the dollar is strong or weak, I should do X, Y, and Z. So if we can bring up that other table, the other thing that would be happening likely is that the yield curve is going to be moving. The Fed starts to cut rates. The dollar gives back some of its strength. Yields are falling. We talked about this. You and I talked about this, I believe, or maybe it was me and Dan last week, where what kind of yield curve environment would that create then? I think what would happen is initially you get what's called a bull flattening, meaning the 10-year yield comes down, but that's a very brief period. Then you enter this period where it's a bull steepening, which means that the short end of the curve is coming down because the Fed is lowering rates. Okay, fast forward, lay that on top of a weak dollar environment, and you look at this table on the right-hand side. Let's say it's a bull steepener. Now look at these factors. What do these tell us? These tell us that large cap is outperforming small cap. These tell us that value and growth, not really that much of a difference. And they tell us that you should buy profitable companies. What else does that all mean? Typically, that we are late cycle.
You don't have to yell at me. I mean, I think,
but the positioning is pretty clear. So
no, it's very, by the way, Ken French, who I don't know, but and I have although Jacob is saying we can name this episode Cool the Engines in the podcast store. Brilliant. So that's done. So nobody has to ask me, what should we name this, which is typically what happens. So that's done. Number two, there are a lot of people out there my age, I hope, or maybe some of them have passed by now. We get to that age, you just never know. But Family Affair was a great show when I was a kid. And Mr. French was sort of like the butler. He took care of the kids. And anytime I hear the name French, I think of Mr. French. I know you don't particularly care, but I do.
This is a different French, but
no, it's no doubt it's a different French. I mean, without question. Now, and French's makes mustard too. By the way, it's sort of that I'm not a big fan of French. Anyway, so here you go. There's somebody asked me a question yesterday. I think it might have been Matrix of Compassion or one of those cats that was not their birth name. They've just decided to use it on the line. They said, you've mentioned a scenario where the dollar can go lower with rates going higher. And I do think that scenario exists. And I think it comes in the form of, the market demanding higher yields to buy our debt, which I still think is going to happen. And that could coincide with dollar weakness, which is something historically maybe we've seen here and there. I don't remember a prolonged period of that happening. But I'm submitting, and I'm not suggesting I'm going to be right, but there could be this environment where 10-year yields start to creep higher in a pretty significant way, and that could coincide with dollar weakness. Does that make any sense to you at all? If it doesn't, just say, Guy, you're a dipshit, because you won't be the first person that has said that today.
Just today. So I think you have to think about that on a global level. I think that is possible. The condition that would need to be present is that other regions are actually starting to do better than the US. So maybe the 10-year yield is creeping higher because we haven't got a handle on inflation. And maybe our economy is slowing down because we haven't got a handle on inflation. Whereas we've got other regions and other central banks who feel like they have got a handle on it. And they're starting to cut rates. They're ahead of us on this late cycle piece of it. And it's possible that the dollar will just, relatively speaking, not be as attractive because other currencies have become more attractive. So I do think that's possible. That would be a scenario that I don't think many of us would enjoy, but I do think it's possible.
No, I don't think it would be at all enjoyable. Not unlike, as I say many times, Dan asked me if I wanted to go to, and I really went, I'm sorry, Bill Hockman hopefully is listening to this, because I went on one of my rants, and I don't know if Dan meant to do this or not, but he asked me if I was going to go to a watch party for a game. And I basically said, then you could see my mood change now. And I said, I'd rather sort of basically stick pins in my nuts. And I said, hand me the hammer. And that's the scenario that this could be. This could be like hammering nails into your nuts. That's how unpleasant it could potentially be.
And you know what else would happen? I'm going to keep this on the straight and narrow.
No, I know you are.
If the 10-year yield was rising, what would be happening to that curve inversion?
Well, one would think it would be flattening out, but I don't know.
I think that is the case, especially if the 10-year yield is rising because we haven't figured out the inflation thing. The economy is cooling. The 2-year is at best anchored, if not falling. So then the 10-year is rising. Now, if we are entering a period,
bear steepening.
That's right. That's right. And if we're entering a period where that inversion is nearing zero, you and I have said this for many, many months, it's not the inversion that'll get you, it's the re-steepening. So if that were to happen while the dollar is weakening and we've got an inflation problem and the economy is cooling.
That's boogeyman stuff.
That's a recipe for a bad cake.
Yeah. Yeah.
Well, I did that.
You know what's interesting? Yes. There are no bad recipes. I mean, I guess there are bad recipes. There are only bad bakers. So and especially when you bake, a lot of like people like me, I'm a bit of an animal, as you've all come to understand. So I'm not one to follow directions exactly correctly. But apparently when you bake, you gotta follow this shit like
you gotta
to
be
the letter.
Precise. Yeah.
There's a precision associated with it.
Yeah, and you got to do it in the right order. You do the wet ingredients first, and then you sift in the dry ingredients, and
when
never
you
overmix.
And when you got to get like the right amount of flour, like you really got to level that shit out. You don't want to, you don't just want to be willy nilly like I am. Anyway, sorry, Amanda. I'm sorry. I'm sorry to you too, Elizabeth. Your time is valuable.
It's okay. As is
our audience's
talk
time.
About baking.
Okay, let's. Speaking of baking. NVIDIA's been cooking the shit out of things in a good way. I'm not suggesting they're doing anything wrong, but here you go. So I'm not asking you to handicap NVIDIA per se. I think my feelings on the subject are pretty well known. It's an amazing company. I mean, incredible growth. I get the whole thing. It really remarkable. But here's where I sort of struggle. On a price to earnings basis, it's very reasonable. On a price to sales basis, it's still very expensive. Now, people say, you know what, Guy, they're going to grow, their revenue is going to grow into that. Okay, fine. My concern is, and to use sort of a football term, they're out kicking their coverage. And what does that mean? They're sort of out earning their revenue. And that's manifesting itself in terms of margins, which last quarter were 77%. So my concern for maybe this quarter or the next quarter or two, it's not about earnings growth or revenue growth necessarily, and this is just me pontificating. It's about margins, because if you start to see a contraction in margins, I think the market may wake up to things and say, you know what, maybe there is some cyclicality here, and maybe at some point that competition that inevitably comes for everybody is coming faster than people thought. Number one. Number two, that March 8th, that Friday, March 8th, and Carter and I talked about this yesterday. He's not as worried as I am, but that March 8th engulfing pattern has not been violated. With all that said, and we talked about it, the importance of NVIDIA, and this is going to sort of go to Butter's work. You mentioned earlier that you didn't think it was necessarily a death knell or the next leg higher. And maybe, listen, I think it's the market is expecting an 8 or 9% move either way in NVIDIA. If this thing comes out and it's a non-factor, maybe the market sort of shrugs the whole thing off and off we go.
Yeah, I don't think it'll be a non-factor. And I want to be clear, I'm talking about just this quarter.
Yeah.
I think if they started to disappoint, if NVIDIA started to disappoint later in the year, or if they guided down, and to your point, the price to sales ratio is susceptible to either what if they stop meeting their sales numbers, but what if they lower their guidance on sales? And their sales are heavily dependent on the other tech companies staying healthy and those tech companies maintaining margins so that they can spend money on NVIDIA chips. So it's a lot of it is very connected. I think that this quarter in particular, because the enthusiasm is so strong and because there's been other good news that the market is already trading off of, I don't think that this particular earnings report is going to take the entire rally down. It doesn't mean that there won't be a hiccup. It doesn't mean that it won't have an effect. I absolutely think it will have an effect. And because of the linkage that NVIDIA has to the rest of the industry, you would see some of that sympathy trade no matter what. Sometimes sympathy upward, sometimes sympathy downward. So that will still happen. I just don't think that this particular quarter is the biggest one that we've seen.
Do you get the hiccups ever?
I do. Yeah.
How do you fix the hiccups?
So you upside down and hold your breath.
Well, how do you get upside down?
Like you stand up, you just hinge at the hips.
Oh, I don't have hingy hips. That's interesting. You know what I like to do when I have the hiccups? I go like this. This is what I do. I go, it's just fun. It's just like it gets such a kick out of that.
Okay.
I'm sorry, but I mean, we got the giggles.
Are we doing questions or what are we doing?
No. Hold on. No, we got to go to Butters. By the way, now I got to do this straight because we clip it. It's that time. Typically we do this on Thursdays. However, since you and I are together today and Dan's not in tomorrow, we thought it would be best to do the work of the great John Butters, the senior earnings analyst at FactSet, and bring his work forth. So without further ado, and this plays into NVIDIA, this speaks to the amount of times companies are talking about AI. So slide it, Earl, and you will see. I mean, it's pretty remarkable. The term AI has been cited on first quarter 2024 earnings calls, 193 out of 500. So that's basically what, 40% or so, the highest in 10 years. The mention was 50 times more on the earnings calls of 11 of the S&P 500 companies, led by, obviously, Facebook. It makes a lot of sense. I bring this up, and I think John is bringing it up probably because of what's going on, the perceived importance of NVIDIA, but the fact that this is all anybody seems to be talking about. Now it's manifesting itself in companies as well.
Yeah, I mean, there have been jokes going around for the last 12 months. If you just say the word AI, your stock will go up. It's a joke, but it's been true, and companies have done it. I think the other thing is I want to point out, and I'll give credit to Strategas for this. They pointed out a Bill Gates quote from long ago that said something along the lines of technology is always overestimated in the first 2 years and underestimated in 10 years. So meaning we pull it forward, we pull the enthusiasm forward. I don't think AI is any different. I do think that we're pulling the enthusiasm forward. I still think that it has to go through some kind of boom and bust phase. We've only seen the boom so far, and there's going to have to be some growing pains and some understanding of how we even monetize this, and we're not there yet. So right now, what companies have been doing is talking about how they might monetize it and their plans and their spending plans in order to participate in this new revolutionary theme, but we still don't know how it's going to create profit, particularly across all these different sectors. I don't doubt that it will help and that it will change a lot of things, but across every single sector, the profit machine is going to be different. It's going to have different effects. It's going to have different costs associated, and we just don't know enough about that yet to pull all of this forward.
Now, if you were to say to me, Swizz, and I want you to sort of handicap what industries, what sectors are going to talk about AI the most. And I think technology obviously makes a lot of sense. I think I probably would have gotten that right. Communication services, I probably would have gotten that right. I'm here to tell you, there's no friggin' way I would have guessed energy was number 3 here. As a matter of fact, I would have said energy is much more towards, basically materials and utilities. And I thought financials would be a lot higher. But I don't know. I mean, I don't know if you want to comment on this or not. Energy using AI or talking about AI, I don't know where that came from. Maybe I missed those couple of days, but that's pretty interesting to me.
Yeah, that surprises me too. I would have thought financials would have been the third one. And I would have thought even some consumer related brands would have been up there too. And that isn't the case. But again, this could change over time. And I can look at it and intuitively say, even healthcare, I think healthcare could benefit a lot more from AI than what's showing up here. Maybe it just hasn't worked its way through yet. Maybe this is part of the life cycle that we haven't seen. And we'll start to hear about it as these different sectors figure out how they can use AI to their advantage. But that should only increase the spending on it over time. I just still think that for some of these sectors, particularly tech and communication services, perhaps we've seen the peak in the enthusiasm around it. And now we have to understand what the execution is. And I think that's going to be the next phase. And the execution is always harder to do.
This reminds me, by the way, these peaks. I mean, if you think about when inflation was top of mind, you saw similar moves or scales or rises in these types of things. And that proved to be, by the way, when these things peaked, well, let's put it this way. I should back out and say the peak of inflation would turn out to be the peak of a lot of people talking about it. I mean, that's somewhat, I get it. But my point is we're peaking here now. Clearly, you wonder if that's going to be the peak of enthusiasm or potentially the peak of the stocks. We'll see. But Butters' work is great. I think do we have a slide, Amanda, for John Butters' work? My God. I didn't even finish the friggin' sentence. And we are. Could it be any tighter? Sir, I'm asking you. Could it be? I guess it could be. It could always be better, but not friggin' much. So check it out. I don't know why
I always
you wouldn't
enjoy
be
it.
this.
I always enjoy it when Jacob messes with you and purposely waits to put the slides up.
Yeah,
even though
I know
you've viewed them.
I know you do that.
So, Jacob, give me one of those.
He's hanging me out to dry. I
Yeah.
know. I dig that as well. But I can roll with that shit. A lot of people would be freaked out by it. Like Trump the other day, his teleprompter went out, and he was standing there for about 45 seconds, not saying a word, with some haunting music playing in the background. And that's not political. I mean, the other guy does the same shit. I mean, but you got to be able to roll with it, or just tell a joke or something.
Yeah.
Anyway, speaking of companies that should have said AI, throw a target chart up there because they continue to suck. And this is one, by the way, I got right. And this is what I've been saying. And I said it this week. And I'm wrong all the friggin' time. But I said,
I'm wanting to look for
I said, Target announcing that they're going to cut price 5,000 items, cut
Tesla.
prices
Saying,
every day.
there goes the SPY.
No,
I knew it.
5,000 of them.
Too late.
I said,
I walked
this
outside.
is what I think happened.
God damn it.
I think they saw that quarter from Walmart. They saw that Walmart's inventories were really, and as a matter of fact, I think Walmart inventories were down 2.7% year over year. They figured it out. Their margins were good. They said, holy shit, we're going to have a bit of a problem.
So
I think they tried
I figured there wasn't no reason, okay, because we kept trying to go higher and higher and higher and higher, and we just could not. And I was ready to grab this downside, and I walked outside just to catch some sun, and I'm watching the charts, and I'm like, bro, like, we're not making really any progress to the upside. Okay? And, of course, it does it now. Like, I literally just sat down. I knew it, man. It's not that I knew it, but I'm like, bro, the probability of a downside move is pretty damn high right now. I don't know if there was a specific reason. I don't think there was. I think it's just you saw right here in the cues, like, look, we climb, can't do nothing, climb, can't do nothing, climb, can't do nothing, climb, can't do nothing. And then, yes, it gets taken right back. So now we are officially underneath. We make it a new low on the day. All right, we did not make new highs. We did partially, but, they are buying this dip. But I just thought there was a really nice opportunity for a downside scalp there. And I just figured I had a few minutes, that's all. I figured that it was showing us in front of the Fed minutes that we would get like a nice little pullback. But, what are you going to do? It is what it is. That's like, it'll happen again. It's happened before. It'll happen again. I need to just come back inside. But, again, it's about timing, and it is what it is. So I can put that back up again if you guys are watching this. That's what you guys just let me know. I'm going to try and see if we
get
have
ahead of it with that, and then this quarter just reinforced happening. Okay, it's that time of the show where we take questions, and a lot of people have questions for you. The first question is, "What's up with the hair?" I'm kidding. Nobody's asking about your hair. They're not.
It's all there. It's all there.
JS is asking, "What does EY?" I love that people call you EY now. Look at that. Do you see this?
Dating again,
what does EY think is the most attractive spot
honored.
on the present? Yeah, that's high. That's high end shit. I can't even attempt to answer that.
Bag.
Yeah.
I don't care.
So basically, the question is, what's the most attractively priced spot on the curve? Look, and this full disclosure, probably about a month ago, maybe a little less than a month ago, I was holding some pretty short-term treasuries. I had some 6 months. I had a year. A couple of them are coming up to maturity. I had been rolling them into 6 month and 1 year maturities. But then it was like, you know what? I'm not getting enough yield for that. And if the Fed keeps pushing this out, the 2 year still tracks the Fed. And now I know there's been a drop in the 2 year a little bit, but it's still pretty attractive, especially if we think the Fed is going to embark on a cutting cycle later this year. I think the 2 year is the place to be. You can still get paid a decent amount, and that's the one that's going to be most sensitive to Fed commentary. And if we think that the risk is to the downside, so to speak, on the Fed moving rates, then I think you want to be in the
JP Morgan.
Couldn't agree with you more. The 2 years of place, and I mean, the reason why is, that is going to be, to me, and this is just me, the small time economist I am. But if the economy starts to sort of waver, which I think is going to happen, you're going to feel it in the 2 year. 2 years is not going to stay at 5 or wherever the hell it is now. What is it, 4.8 or something? It ain't staying here. So I don't think. To me, the risk to the upside is in the 10 year. The risk to the downside is in the 2 year. So to answer the question, like Elizabeth just said, it's 2 year. This question I like. Su Young Cha. Pull this up because this is cool. I like the way this cat's doing this. Hey, guy, boy named Sue here. I mean, who even speaks that way?
He's got your number.
How come no one is talking about the classic Iadami double top? Bullshit, man. Pull up a chart, Amanda. Throw this thing up. We've said it for a while. And actually, Carter and I had a conversation.
We talked about this
said
level.
That longer term. We said if you go back and look,
you have some
Amazon really has got to get through this level. And I said it sort of got through a little bit, but you know what? Not close enough yet. And if you go back and look, I mean, this is now early 2021 levels-ish in terms of Amazon that we've just traded up to. I don't say we're failing here. We're not, but we're not breaking through in a meaningful way to the upside like you saw throw up a Google chart. So the counter of this is what would happen in Google. Google got up to those prior highs and blew through it. Watch this. Bang. You see that? Prior high. I mean, we don't, and just so you people freaking know,
best
this ain't
updates.
scripted. We don't rehearse this stuff. I mean, I just have a photogenic memory. I know it's photographic. But with that said, you see the difference here.
You have
in this case, too, we got to those prior highs. We blew through. Throw back to Amazon. Jacob, don't leave me hanging. Or Amanda. And you'll see in this case, we're not. So I am a little bit concerned about it. So there you go, Sue. And I dig your question, by the way. This is for you. This is Wavy's always here. And again,
I'm looking at the queue.
I'll say this. You remember this.
Yep.
That was not like he wasn't born.
Just not making any
and
progress.
When the baby was handed to his mother, she said to her husband,
"So now
let's name him Wavy." That's not what happened. So again, this is some.
I also doubt that their last name is actually McFly.
Nor do I.
It was. Yeah.
Can you guys explain how the yen carry trades work? How it affects U.S. markets? I mean, there are like 9 questions here. And implications of a significant BOJ tightening. They're already screwed. I think this is where the next Lehman is hiding. You know what, Wavy? I actually sort of agree. I mean, I agree with you. But quickly, I mean, in terms of the yen carry trade and the importance of it and all those different things that people talk about all the time. By the way, you do reach this point of diminishing marginal returns for you economists out there where things can get, so good it's not good anymore. Anyway, please.
Yes. Okay. So the carry trade, just very simply, and there's a lot to it, but basically what's been happening for a very long time, as we know, the Bank of Japan has held rates low and they've controlled the yield curve, which means that yields in Japan have stayed low. The Japanese yen, therefore, has been the weaker currency in most currency pairs. Okay. U.S. investors, then it doesn't even matter if you're a U.S. investor or not. Any investor knows that you can borrow in the weaker currency for cheap, and you can lend in the stronger currency for more. So if you borrow in the weaker currency, you can lend in the stronger currency for cheap. And you can lend in the stronger currency for more. and invest in a stronger currency, and you make the spread. So that's the carry. Okay, that's the difference. And it had been a pretty guaranteed profit for a long time because the Bank of Japan was controlling their yield curve. So as long as that happened, it was almost a guaranteed profit. That's why when the Bank of Japan started to move away from what they considered yield curve control, it was big news, right? Okay. Because that then took that guaranteed profit of the carry trade a little bit off the table in the sense that, okay, now it's up to more free market forces, and that makes it less certain.
You guys
know what would happen is this is where the risk is. I think we're still pretty far away from this happening, but it's a possibility, and it's something that we're inching towards slowly. If the yen strengthens enough, everybody that has borrowed in yen ends up underwater on those borrowings. They have to cover it, and it's becoming more expensive for them to pay it back. Also, the amount that they're making on that spread narrows. Now, where we are right now, we've got a Japanese 10-year yield. I don't have it in front of me, but let's say it's somewhere around 1%. We've got a U.S. 10-year yield somewhere in the 4.3s, 4.4s. Still a pretty big spread. So the carry trade is still working, is what I'm saying. Over time, if the yen strengthens, if the Bank of Japan raises rates, if the yen strengthens because of it, that gap narrows, and then you run into what would be an unwinding of the carry trade. You can almost think of it like when people have to cover their shorts, right? And then you're just chasing. So I still think we're pretty far away from that, but there is a lot of capital tied up in that carry trade that would have to unwind if something moved very quickly.
It's interesting, what is fascinating to me is, nobody wants to use the term, and I try to be as respectful as I can because I don't want to be too hyperbolic, but with Japanese rates going higher, the fact that their currency continues to weaken is going to be really problematic. I mean, there's a high-stakes game of poker going on right now, and I think the market is going to start to really test the Bank of Japan. And I don't know how it plays out.
Starbucks still killing it.
I don't,
man. Those
but
$80
there are going to be some really interesting things happening. And they stepped in a couple times, Bank of Japan, to intervene in their currency, to a modicum degree of success. I think dollar yen got at its trough. The dollar got up to about 160-ish against the yen. It traded down about 152.5, 153. But very quietly, it's back to about 155.5 again.
550%.
And that's with yields going higher in Japan. So I don't know. I mean, I'm just saying people are not paying enough attention. Last question, I promise.
You get to 140.
Matt Walter, which is a legit name. I mean, at least this cat, uses his name. Question about volatility. Is it broken? Well, I don't think it's broken. This is just my quick answer. I just think the world has changed. And I think what the market has learned, and again, I think zero to expiry options have something to do with this. But I think more so what's going on is in an environment many years ago when people bought volatility as an insurance policy and then came to realize that, wait a second, we're just pissing money away by doing this. The market never goes down. We're going to stop. So that was leg one down in vol. And then there's geniuses came out and said, wait a second, not only don't we have to buy it, we can actually sell it and create a synthetic dividend for ourselves. That was leg two down in volatility, because if the market's never going lower, we have nothing to worry about. So I don't think it's broken. I think it's just being used differently. So I'm not trying to be nuanced or glib. I just think that's what's going on.
Thinking about a 207.
Well, I agree with that. I do think it's being used differently. I also think that it is a measure of complacency, and it's a measure of comfort. And if you look at just the bullish readings in the market, the AAII surveys, all the price targets that keep chasing each other upward, it's not really a surprise right now that vol is low. The other thing about volatility is that we talk about it as if when market stress comes, it's going to go up and stay up. That never happens. Volatility is a spiking measure. It's not something that goes up and stays elevated for long periods of time. So if you're trying to capture a profit in volatility, the timing has to be right. And to Guy's point, you could sit in it and be sort of losing money for a very long time waiting for that spike. And if you're waiting for that spike, you got to be out of it real quick when that spike happens, because it'll come back down very quickly as well. So I think we look at vol, we give it a little more importance than it deserves, especially in this market environment. And again, I always look at things through the macro. Macro volatility has fallen, which there is a connection between macro volatility and stock market volatility. But because we have so much transparency from the Fed, we know exactly what they're targeting. We hang on every word. Just the volatility in inflation has fallen. The volatility in GDP has fallen. So across the board, volatility is not as sensitive and probably not as good of an indicator as it once was.
This is
It was a good movie with Michael Douglas. I think it was Falling Down.
He played a little more to go to the
real
downside.
Just whack job. I sort of got a kick out of it. It wasn't a great movie, but I liked his character.
10 minutes away from
for
the
those
Fed
that care.
minute, so.
You know, what do they call it when you say something and do something else? But hypocrite, right? And I'm a bit of a hypocrite with this because, you know, I'm not an AI. Like the world is passing me by, which is fine at my age. I mean, something's got to happen, but it's not passing by risk reversal. And why do I say that? Slide this shit, Earl, because we have a new AI-generated podcast that started on Monday. Drops, I think, as the market closes. Look at that. Drops daily after the market closed. Look at those friggin' graphics, though, Elizabeth. I mean,
those are cool.
Badass.
Yeah.
I mean, that's Timmy Adami right there, just getting shit done. I mean, that's really cool. I mean, because it's like a vortex. Like once you're in it, man, you're getting out of that thing.
Yeah.
Which is cool.
Well, and I want like a little picture of Keanu Reeves somewhere.
Do you? I've never seen the movie. I know you talk about it. Dan, see, that's a movie.
I just watched it for the first time, actually.
Why?
Because I had never seen it, and I felt like I don't know. I just felt like it was one of those ones that you want to be able to say you've seen.
Yeah, like Dan likes movies like that. Like he's, you know, and the other some other thing with Keanu Reeves. What's the other movies in? Not
Speed?
Jack Reacher, the other guy. Like it's somebody's name.
Oh,
what's it? Amanda. Jacob,
yeah,
text
I don't
me.
remember.
You know.
Yeah, I know what you're talking
Jacob,
about.
You know what I'm talking about, right? Jacob's gonna talk to me. I don't even know. Hold on.
But I remember him in Speed.
Nobody's
Sandy Bullock.
Yeah, no, and they should do Speed too. Oh, Wilkes, not Jack Wilkes, Jack something. Hold on, John Wick. John. Now I can't even believe we have this up, but put up how you're going to get a badass T-shirt because this is pretty cool. Now, I didn't write this, but okay, that's fine. Leave a 5-star review. Like you're telling people the review to leave. It's like, why? But that, you know what? Yeah, leave a friggin' 5-star review. Screenshot it and email to contact@riskreversal.com. Include your size and your mailing address. And we're going to send you these T-shirts and they're nice. They're cheap. They're nice T-shirts. So do this. Why wouldn't you do it, right? I mean, it's barbecue season. Imagine going to the grill and wearing this thing. People would think it's, you're like, whoa, man, that cat is badass.
It's a nice volatile day.
Yeah.
Yes or no?
For a day where you have
absolutely.
These
I mean, I don't know why people would do it. Maybe they want to leave a 4-star review.
Now, what do
you get if you leave a 4-star review?
You know what you're getting? You're getting shiny pants is what you're getting. That's the line we use there. You get ugats, in other words. You get nothing.
They say market call on them?
What, shiny pants?
Yeah.
It doesn't say market call on the
No,
okay. You're not getting physically shiny pants. It's an expression. It's an expression. It means you get ugats. Nothing. My offer. This is my offer. Nothing. It's like Michael Corleone. Okay. Yeah. How do you get your trade ideas? I'm glad you asked that, Elizabeth.
But we welcome all of your authentic reviews.
Yeah, no, I like authenticity. I mean, there's nobody more authentic than I am. Would you agree with that?
Yeah.
I mean, I think people are surprised sometimes. They're like, you're the same jackass in real life that you're on television. I'm like, yeah, what do you want me to tell you? Right or wrong? You said that the first time you met me.
That's right. You know, and I've told this story before, but I spoke at a conference once and somebody waited in line to ask me a question afterwards. And he waited for a while and he finally got up to the front of the line. And his question was, what's Dan Nathan like in real life?